of the African Economic Research Consortium. You know, but let me first continue with my sister Diana and David Cracknell. Yes, I saw that in the program. And when I saw you, David, I just knew that, just from the looks, that this presentation, the thematic one for opening this program, has found the right person. Honorable fellow colleagues, you know, the problem is when you're used to the political platform, now you go and say honorables. I almost started CCM, oh yeah, but now it's a different platform. Oh, you know, when you go to other areas, you started with the greetings of praise the Lord and others. But now we are here, and I can tell you from the introduction that was given to me by my senior, the person who groomed me at the University of Birmingham, it makes me feel so honored. Actually, I'm very honored to be here. It's a great privilege, but it's a greater privilege to be here with Victor, because you know, when you're talking about the molding, he really molded us very well at the University of Birmingham. And we will never stop. Me and my colleague there, he's very happy there, Peter Muriu. He knows how Victor molded. Now we are here, at least we can say we are able to present ourselves before our fellow people, our fellow human beings, as human beings, because he did what was necessary to bring us to a level where we could now have the confidence and even to derive authority where we are now. So we won't stop saying thank you. Now, moving to this matter of financial inclusion in the digital area, or the e-finance and marketing in our region. It really is an area that needs to be looked into, and the initiative by the African Economic Research Consortium, of course funded by the Bill and Melinda Gates Foundation. We should appreciate the Bill and Melinda Gates Foundation for its support to this work, which is very crucial to supporting development of the local people in the region, because we're having the twins of financial exclusion on one part and digital divide on the other part. And these have to be addressed. We've seen technology offering interface to simplify offering of financial services to the people, especially in the rural areas, especially the people who have been financially excluded. But some of them still, despite the technology, cannot access because of the digital divide. And also, as I was having a word with some of a colleague here in the morning, and I pointed out that when people are talking about financial exclusion, they mainly, most of the thing, people are, the financial exclusion is being not understood very well. People think it's lack to access of credit. Well, access to credit may be one, but there's some other financial services which also come, maybe offering financial products like insurance. So these things will be looked into and are being looked into by the African Economic Research Consortium. You've had the executive director speaking here of the plans for the next 10 years that are going to equip us Africans to become more skilled in terms of doing research, to bring out relevant work and information to the policy, so that we move forward in an informed way. Because talking that a person coming to just make a talk without having first researched will not be very helpful. So we would really thank the Bill and Melinda Gates Foundation, African Economic Research Consortium, and other stakeholders who are going to assist this capacity building of Africans, and to give us hands-on research that will make us come with policy recommendations that are implementable to make Africa a better place, so that the grassroots population, the ones who have been excluded from financial access finance, and we are able to move forward to have better life for everybody in Africa. And without much ado, you know, with us politicians, we'll have, even if you give us 1 hour, that won't be enough, because we'll start talking about other things, and you know, as you'll find yourself as if you are addressing voters, requesting for votes. But now we are not requesting for votes. We are just requesting to do better research, serious research that is going to inform policy. And without much ado, let me, with all the honors, and on behalf of colleagues here in the front bench, especially our Mzee, Professor Murinde, who is getting younger. You know, he has an inverse aging, looking younger every day. Let I'm declaring this forum open, and now we proceed to the next activity. Thank you very much. And to be as an East African, let me say thank you very much in several languages. Thank you very much. Asante sana. Weba enyo, erukamano, morakoze, and of course you won't forget the ones in DRC. They use French, so we say merci beaucoup. Thank you. And shukran, shukran.
Thank you very much, Honorable Dr. Makame, and thank you once again, Professor Victor, for giving us the opening remarks. And now I would want to welcome our thematic presenter. Kindly, could you give him the flicker? Yeah, our thematic presenter is none other than David Cracknell, who is known to most of us. David was the project coordinator of both framework and the country case studies of this specific project, which started a while ago, and is the director of First Principles Consulting Limited, and was previously managing director Africa for Microsave. His technical work focuses on financial inclusion, policy and regulation, strategic and institutional reviews, market research, pilot testing, delivery channel diagnostics, and several service delivery, and writing on microfinance and banking. He recently co-published a book on digital financial inclusion and market development for ARC alongside other authors. He has published over 70 blogs on financial services on his website, First Principles Finance. Please, in finance, you can check on that. He's a judge for the Think Business Banking Awards, a keynote speaker, and a board advisor. He has experience in over 25 countries in Africa and Asia. His recent work includes strategy development for shared services and for microfinance institutions. He works on digital agricultural finance. He has trained in ESC, assisted in the development of the National Financial Inclusion Strategy for South Sudan. Please note that South Sudan was one of the countries that we have studied in this particular project, and prepared multi-country market feasibility studies. Earlier, he worked through the National Treasury for SASRA, the SACCO Society's regulator, on creating a policy and regulatory framework for shared services for SACCOs in Kenya, which is leading to the implementation of a shared technology platform for SACCOs. David has reviewed donors' digital finance programs and performed country-level studies leading to the creation of donor programs. At different times, he has worked building the capacity of central banks in Bangladesh, Uganda, Rwanda, Malawi, and Zambia in digital financial services. He is fluent in English, of course, and has basic knowledge in Sinhalese and French. And just to crown it up, he has a certificate in financial technology from Oxford University Said Business School, postgraduate diploma in bank financial management from the University of Sri Lanka, and degree in economics from the University of Lancaster. So allow me to welcome our thematic presentation, David Crackman. I think he has enough experience to talk about this title. Thank you. Welcome, David.
Sometimes I don't even recognize myself. It's a long list, which means I've done a little of a lot of things. Thank you very much, all protocols observed. What I'm going to talk about, I'll talk about policy options for digital financial inclusion, but I'm prepared. One of the advantages of age, and also perhaps being slightly offset from the being European, is that I'm sometimes prepared to say things which are not very comfortable. And I'm happy to do so. I'm also happy to praise. So you'll get some praise, we'll have some admonishment, and we'll have some comments to say these are areas that we really need to improve on. And because I've worked quite a lot with central banks and with policymakers and regulators, I also appreciate the path is not always straight. The path is curved. And I appreciate that there are realities that we are dealing with within public institutions which make something simple actually quite complicated. So I'll mention some of these things as we move through, because that's the reality that we're working with, and we have to face that reality. And the good thing about AARC is that we have a lot of researchers from institutions across Africa, so a lot of what I say is going to resonate. But I am going to say some things that are uncomfortable, and I apologize in advance. So perhaps we'll kick off. Okay, so that's interesting. I didn't do that. I think I'm going to have to get you to control it from the back. So next slide. Okay, so the first thing is to recognize just briefly the importance of digital financial inclusion. This is a slide from, the graphic is from the AFR, Access to Finance Rwanda, and they prepared this graphic in 2020. The important bar here is the yellow the yellow part, which is other formal, non-bank. This is largely mobile money. Yeah, it's a proxy for mobile money. And if you look at Rwanda, 41% of people had access to the highest form of financial access was mobile money. If you look at Kenya, 43%, the highest access was mobile money. It's not just mobile money in that sector, but it's the biggest part. Okay, Uganda, 42%. So you can see across East Africa how important this has been. Look at Tanzania, 49%. You can understand because Tanzania is a very big country geographically. So finding ways for financial inclusion to work becomes slightly more challenging because of geography. Mobile money has largely sorted that. So it's very, very important. Digital financial inclusion is incredibly important. As we move forward, this may help South Sudan to leapfrog. If we can get the policy and regulatory environment and the entire ecosystem working, perhaps this could help the Burundian financial sector really work. Yeah? So it's incredibly important. Next slide. Now, what we also know is that digital financial systems evolve. It's not static, but they evolve through a path. And this is the path that I've observed. So generation one, channels, mobile money agency banking. You get large numbers of people signing up for a service. You get large numbers of agents. You start with agency banking. So you've got access to large numbers of agents, large numbers of people who are signed up onto the system. This has to happen. Generation two, extending use cases. Every country has things that promote the use of these digital channels. So in Kenya, we had merchant services, we had digital lending, M-Shwari. This creates volume, numbers of users on the system. It creates large numbers of transactions. The system needs users and transactions. That's how it pays for itself. Generation three, the emergence of the fintech industry. Silicon Savannah, Nairobi, came about largely because of M-Pesa and digital and mobile money. It really stimulated the emergence of a fintech industry. Rwanda wants to be the fintech capital of East Africa. Policy-wise, it doesn't get there yet, but it wants to be there. Kenya, we have Silicon Savannah. Tanzania, well, we want to create a fintech industry in Zanzibar. So we're now all talking about the emergence of a fintech industry. Generation four, platforms and embedded finance. We're beginning now to put in things like e-commerce. You can't move in Nairobi without being able to order something from your mobile phone and get it delivered to your house. We've got mHealth, mobile health. Yeah, all of this is built actually on the interoperability created from mobile money. So, and the fact that everybody now is working everything off their mobile phone. So these platforms, embedded finance, fintech services now occur through financial institutions, but they're enabled. Financial institutions use fintech in the delivery of their and design and development of their services. Generation five is fintech as a national asset. This is where we're beginning to change policies, regulations for the benefits of the fintech industry and indirectly for the financial sector. This is actually a little bit challenging because this is when we're getting into national policies that begin to conflict with each other. We'll talk about that a bit. But if you want an example of this, in the City of London, the City of London actually commissioned something called the Khalifa Review, which was a review of policy towards financial technology. The City of London wanted to ensure that it maintained its leadership position in the fintech sector. So it's got a national policy on financial technology that is semi-endorsed by the parliament in the country. So this is actually a very important thing. We need to recognize that financial technology is an underlying asset within the country, and it needs protection, it needs nurturing. Yeah. How important is this? AI, machine learning, this is all part of how things are evolving. Do we want to be behind in this curve, or do we want to be ahead? Very, very simple. Next slide. I need the slides because now I can see myself, which is very nice, but still. Okay, so one of the challenges that we have now, though, is that growing this ecosystem depends upon foundation conditions. If we don't have national identity or proxies for national identity, it becomes very difficult for the system to grow. National identity in Tanzania, it delayed the adoption of digital. National identity in Uganda delayed the adoption of digital. Because we had a national identity, it wasn't a digital identity, but we had a national identity in Kenya, it actually promoted the adoption of digital. It became much easier and much more quickly. Liquidity management. Digital ecosystems evolved through cash. So that means you have to think about your cash in, your cash out, and your liquidity management. For people to hold money in digital, they need to be able to convert it into cash. So liquidity management becomes a big issue. This is a foundation condition which is particularly important for the development of digital in South Sudan, for example. Physical infrastructure. Okay, we have a physical banking sector in Kenya, and it's a good banking sector, but the digital banking sector wouldn't have happened without the fact that it leveraged on the financial sector. So we need these interactions on the physical infrastructure. The physical infrastructure isn't just the banking sector, it's also the cell phone towers, it's the connectivity, it's the electricity. So there's a whole set of physical infrastructure that's required. We need to grow these volume drivers and value drivers. Do I want to say in Uganda, one of the biggest volume drivers in digital finance is something which is on the betting side of life? If you drive to Kampala these days, all you see are betting shops. I'm sorry. But again, it's a very important volume and value driver for the sector. Every country is different, and every country's recipe is different, but every country will have volume drivers and value drivers. Regulatory environment. The regulatory environment at the beginning is allowing something to happen. It's not necessarily about the most comprehensive regulatory environment, it's about the permission structures. And then we have the informal bridge contracts, the work that Jonathan Greenacre was doing, which is about how we use informal systems for making things work in rural areas. And this is actually very much the case. So these are the sort of foundation conditions. If you want digital to grow, this is some of the soil that we need to have. But we need growth. So what are we going to have? We're going to have different forms of interoperability. These could be systems like in Uganda. So for example, we've got the agency banking initiative. It could be systems like in Kenya, like PesaLink, for example. Interoperability is something which is not new. It's important to say it's not new. RTGS is interoperability. The clearinghouse is interoperability. So interoperability has been evolving for many years. It will continue to evolve. It's becoming more efficient. It's becoming faster. It's linking in more players. But interoperability is not new. So the regulation and policy environment also evolves. The work that Peter Knack did. If you haven't read that study, please do, because it's very entertaining, very interesting about how the policy environment has evolved in markets like Kenya, and also he uses China as an example. So the policy environment moves from laissez-faire, which means let it happen, to looking at things like accessibility, competition, controlling for abuse. And one of the important things is also the evolution in financial inclusion. Because now, just as Abdullah was talking about, we're not talking just about financial inclusion. He used the words financial exclusion more than financial inclusion. So the language is evolving to talk about the people who are not there, rather than the people who are there. And much about what we're talking about later today is about the people who are not there. And that's a very, very significant change in the language of financial inclusion. Next slide. So, we have a number of very significant regulatory issues, and this was informed by my work, and it's through my interaction with central banks. So I'm going to talk about things, this is where it becomes a little uncomfortable. What we've got is regulatory avoidance. I'll give you two examples. MTN in Uganda and Airtel in Uganda. They were told to interoperate. So they did. 2008, 2009, they connected to each other. But they didn't really want to interoperate. They wanted to encourage their customers to use them themselves. So what did they do? They said, if you want to transfer money, we'll allow you to transfer money. We'll give you a code where you can cash out the money. But then they said, we're going to charge you more for cashing out this money. So what then happened is Ugandans, if they wanted to make a transfer to an MTN line and they were on Airtel, they would go to an MTN agent and get the agent to do the transfer for them, and they would pay the agent some money. So what you end up with is a principle, which is interoperability, and a practice of everybody, which is different. So we get the regulatory policy and intent, which is in one direction, and we get the practice, which is in a different direction. Yeah? We have the same thing. We have interoperability, in theory, between Airtel and M-Pesa in Kenya. Airtel wants this because they're the junior player. Safaricom hides interoperability on one of their menus and doesn't talk about it. Technically, they have done what the regulator wanted. Practically, they're not promoting it. Yeah? So we've got regulatory avoidance. They're applying the letter of the regulations, but they're going against the regulatory spirit. This comes into the second point, poor policy implementation and enforcement. The fact that there was a significant disintermediation effect in the case of MTN and Airtel in Uganda was obvious from a few months into the operation of this alternative interoperability approach. But what did the policymakers do? What did the regulators do? They'd moved on. Their attention had shifted. So we have poor policy implementation and enforcement. In Rwanda, for example, Rwanda has some of the best written policies in East Africa. They are really nice. The implementation is very often not there. So the policy will be there, but the practice is very different. If we're going to actually move forward, we need to connect the regulatory avoidance to the implementation and the enforcement. And that's really important. And we're not actually doing that very well. Then when we want to make changes, we have to be able to make changes in an efficient manner. Okay? I'm going to talk about Uganda again. I'm sorry, my Ugandan friends. Agency banking came into Kenya as a response to mobile money in a significant way. So mobile money introduced 2007, 2008. Agency banking introduced in 2010. 7 years later, agency banking started to be introduced into Uganda. The regulatory process was, or the legislative process was very slow. Yeah? Has to go through Parliament, has to sit on the big man's desk, and then when it's right, it's signed into law. So when we want to make changes, we've got to think very carefully about how we set up to actually create and implement change. And in many cases, we're not. One of the advantages Kenya had was it makes amendments to all the financial sector area through the Finance Act every year. So small changes are made in regulations, amendment to this act, amendment to that act, amendment to this act, through the annual Finance Act. And that means that Kenya constantly made small changes. Those same changes to be made in Uganda requires a regulatory process which is quite long, a legislative process which is quite long. Then we have a failure to facilitate innovation. Sandbox is not working effectively. This is going to sound terrible because I'm talking about Uganda again. Uganda has a regulatory sandbox, but it has barriers to entry to get into that regulatory sandbox. There are only two, I don't know which ones are, but there are only two projects in the Ugandan sandbox at the moment. So how are we going to create innovation if we put barriers to entry to get into the innovation architecture? I have questions. I have lots of questions. So I'm going to be fair because I've got questions on Kenya later as well. So in all of this, we have to coordinate. One of the challenges is the financial sector, when it moves into digital, isn't just one regulator. Okay, stop and think. If we're changing something in digital, who could be involved? Okay, central bank. Okay, maybe SASRA. Okay, maybe the Insurance Regulatory Authority. Okay, what about the Data Protection Registrar? Okay, because we're using data. What about the Competition Authority? What about the Communications Authority? There must be some other authorities as well. So you begin to move in a very sort of circular route. What about the National Treasury? Because they might be funding the system or they might be wanting to use the system in some way. So we begin to get into issues of coordination, which become very challenging and very difficult. Next slide. So, briefly, models for interoperability. We have platform-based interoperability in Kenya. So we had M-Pesa. One of the reasons we could move forward very quickly was because of M-Pesa, and because M-Pesa linked into the banking sector very, very quickly. Now that meant that Kenyans could do merchant transactions because they could pull money from their store of value into a wallet and use that money very effectively. If you have to go to a merchant, an agent to put money onto your system to use that for merchant services won't work. But if you can pull it easily from your long-term store of value, like a bank account, then it does. So this interoperability was very, very important for driving transactions through the system. And then, of course, we ended up with PesaLink. PesaLink was good idea, but being a collaborative effort, it took 5 years to get anywhere. Yeah? Uganda, peer-to-peer interoperability. This is the system set up for agency banking. And we have bilateral interoperability where we connect individually between institutions. Tanzania is slightly different. They've introduced the Tanzania Instant Payment Settlement System. I don't know whether there's two S's in that or one, because I've seen it both ways. But that's now being introduced. Took a long time to develop. Lots of issues around governance, around funding, and around how the system is going to work. But now I think there are 6 mobile money operators on the platform and 39 financial institutions. So that's now really beginning to gain some traction. In Rwanda, which has talked about interoperability, sometimes from the earliest, we now have partial interoperability introduced at national level, and at the moment it's only for the mobile money side of things. Next slide. So, in theory, interoperability encourages greater use, promotes new types of transactions, expands access, and reduces customer costs. Certainly, that's been the case in Kenya. We can do so many different things electronically, digitally now. We spend our money in so many different ways. I never queue to pay a bill. Yeah, I just get on my phone. 2 minutes later, the transaction is done. Very, very, very easy. If I want to send money to somebody, instant. Yeah? So the challenge is interoperability by mandate risks of always. When we dictate that the system works in a certain way, the system is going to react and respond. Interoperability and competition. Interoperability can stimulate competition, but if you're at the center of this nexus of interoperability, you can also have a negative impact on competition. Safaricom is in a very interesting situation in this sense, because if Safaricom sees an innovation in the market, it can take that innovation and scale the innovation. Yeah? In a different way, so it won't be necessarily anti-competitive per se, but there are some impacts that interoperability has on the competitive environment. And this is something we're going to have to research more going forward. We also have interoperability at the scheme level versus national. So scheme level, ABC, PESA-Link, national interoperability. We tried to introduce that in Uganda. It's not actually happening at the moment. We've got national interoperability de facto through M-Pesa. We've got national interoperability increasingly in Tanzania. But we also have competing revenue models between banks and MNOs. Their reason for interoperating is different. For the mobile money providers, interoperability and transaction fees, that's their revenue. So you can't touch transaction fees too much. For banks, they have multiple income streams, and their money is made from holding money. So they hold assets, and they benefit from holding those assets, which means that how different players respond to interoperability is different. Yeah? And we need to recognize those different motivations. Then we have a lack of data for policy moving forward, because institutions hold on to data. So we don't have the data to make an informed policy. Next slide. I'm going to go a little bit quicker. So, Kenya plans to introduce a new national solution. Whilst it sounds very good, the financial sector-wide interoperability solution will integrate certain aspects of payment services which are offered by financial institutions. I'm slightly questioning this, because we're already integrated into a platform and that platform works. So the value proposition for Kenya, despite the very good words, and it's very nicely written, needs to be clearer. Okay, next slide. So in Tanzania, we have, I put TPP, so it should be TPSS, has now expanded to 45 institutions. We've got guidelines for a sandbox, we've got QR codes. A lot of things are happening in Tanzania. You saw that on the infrastructure side coming in from the airport. Things are happening. In Uganda, we've got continued expansion in e-commerce. We've got MNO, mobile network operator, peer-to-peer interoperability. We've got uniform pricing, so you can send money to anybody in Uganda at the same rate on mobile money. But elsewhere, you've got problems. We still haven't worked out how to interoperate properly pricing-wise on things like POS devices. So you'll go and do a POS transaction, and depending on whose POS that is, related to whether your card is from a certain bank or another bank, you could be on net or off net. If you're off net, there could be additional charges. So that's very confusing. A sandbox was introduced in 2020. I've just said that there are challenges in in my view, how the sandbox is established. Then you see that word at the end. I'm going to talk a bit later about taxation, because taxation becomes an issue as we're trying to expand the digital ecosystem because of how the tax is being implemented. Next slide. So some recommendations. We need to work better together. We need to review regulatory overlapping, leverage development partnerships, coordinate public-private policy. This all sounds very good, but it's really important. and we need to increase the flexibility to make legal changes. I mentioned the legal issues earlier. So because this is a very complex environment, we need to be able to coordinate between all these different regulatory bodies. Leverage development partnerships, there are donors willing to invest in this, but the donors also are doing a lot of policy-based research using a making markets approach. And so they understand quite often which levers to push to make the system work better because they've done the homework. We need to make sure that's part of national policy. In Tanzania, for example, the new financial inclusion strategy, written very differently from previous and has a lot more depth. Next one. Next slide. So, national payments vision and strategy. Okay, we're going to have new players involved. We need to increase the number and the nature of participants within the financial sector. This is sometimes an issue because it means opening doors that regulators and policymakers traditionally want to keep half closed. So how are we going to make sure that we increase the number and nature of participants? Consider applicability of principles-based approaches. The National Payments Vision and Strategy in Kenya talks about 5 pillars, which are things like trust, soft issues, trust, data, the dataverse. So we need to be thinking also not just about supervisory approaches, but also principles-based approaches for regulation. This is where you begin to have the payments side of a central bank kind of fighting with the supervision department within a central bank. You begin to get issues with how we're working with digital credit, for example, in Kenya, where perhaps a principles-based approach would have been better than a supervision-based approach. Talk to me later about that if you want. We also need to talk about support interoperability at national level, and also not just interoperability, but shared services where we can share infrastructure. This is something called banking as a service, payments as a service, software as a service, infrastructure as a service. I wrote SASRA's policy related to shared services. We also need to make sure that our rural finance ecosystem develops. And that means really thinking through carefully about how rural finance works and how that can be supported through digital agricultural finance, how we can make sure that we have an infrastructure policy nationally to improve signal coverage, electricity, to explore in some markets informal solutions for liquidity and cash management. Very, very important. We don't talk enough about how rural finance is working. And we're going to be talking about gender, we're going to be talking about disability, we're going to be talking about different people. We're not necessarily talking about where they live. Next one. Okay. We need to be thinking then about a national digital finance policy because we're talking about coordination. So we establish a common vision for the ecosystem. We support physical infrastructure development where needed. We provide directives for government and social payments to support financially excluded populations. We promote interoperability and shared services. We guide data sharing and aggregation, expanding the role of the credit reference bureaus. Next one. We develop innovation policies drawing from examples. We set clear expectations for and monitoring of sandboxes. Macha talks about this in the case of Tanzania. We support fintech innovation infrastructure. This is something that happened at national level in Malaysia very well, and Singapore for that matter. We provide funding for innovation from national resources, development partnerships, social investors. So we have to finance this innovation structure. We review taxes and fees on digital financial services. This is becoming a much more significant issue. We enhance coordination. We improve industry voice, industry associations and collaboration mechanisms. In Kenya, we have 3 or 4, depending on how you count, fintech associations. So how do we get an improved fintech sector voice? Now there's talking about different collaboration at the moment. We have to improve the customer voice. If a customer has a problem and complains in Kenya, who do they complain to? There's not an ombudsman. depending on where the problem lies, it could lie with the competition authority, it could lie with the central bank, it could lie with the communications authority. Where do they actually get redress? There is no clear way forward. So the customer has a very weak voice in Kenya, for example. And I'm sure that's also the case in most other East African countries, because there's no coordinated mechanism for them to get redress. Now, you've got to think, we're in a digital ecosystem here, so we're not dealing with people anymore. We're dealing with machines. So redress becomes much more important. And we need to make sure that we improve the customer voice in this. And continue East African cooperation and coordination. We share standards, we share approaches. We're reasonably good at that. Yeah, that is something. And you see common policies coming across East Africa. So the environment is growing, the environment is changing, and we need to be quick to respond to this changing environment to make sure that it works for everybody. One of the questions I was asked by one of the AERC alumni from Uganda, which I think is very important, which is we have a different form today of exclusion, and that's voluntary exclusion. We have people who are deciding not to be part of the digital ecosystem. And that is because we have a challenge between the Treasury on one side that wants to use information for taxation, and we have financial inclusion, which is talking about use of the financial sector. So we're now in a situation where some people are choosing to go back to cash. Yeah? So we have to think very, very carefully about how these competing priorities are being addressed, because we could end up with voluntary exclusion. And I see examples of that now in Kenya. Traders in Eastleigh, which is the Somali market where goods are coming across the border tax-free and ending up in a suburb in Nairobi. And now if you go there, you can't use M-Pesa, you go to cash out your M-Pesa and you pay for something in cash. We see examples in Uganda. And I'm sure we'll see examples if I look in other markets as well. So we've got to be thinking very, very carefully about how our digital world is evolving. We've got examples of different tax authorities going into your bank accounts these days. Time is up. So, over to you.
Okay, thank you very much, David, for the wonderful presentation. We would want to move into the floor questions. And before we get to that, let me use my advantage as the chair. I've heard you talk about the countries, and I'm asking myself, which of these countries, even outside the ones you've talked about, we can benchmark with? Isn't there any which we can try to look forward and see how really the interoperability has worked, and we can try even to see it as a role example, even if it's in the developed world? Thank you. Now I want to open the floor. Yes, starting with Peter Wright, yes. And yes, Samson. And Professor Moshi, then Elizabeth, in that order, I think, and then we get 5 questions, and then this is, yes, Boaz, 5 questions. Sorry about that. So we start with Peter, Samson, Professor Moshi, Elizabeth, and Boaz. And please direct your questions to any of the of our guests here today. Please be very brief and straightforward to the question. Thank you.
Thank you, David, for that presentation. So there are 2 points to David and also to the floor.
Please,
sorry.
If you could first say your name, institutional affiliation, and then the question.
Oh, well, thank you so much. This is Peter Omalwa, affiliated to the Central Bank of Kenya and also ARC. Oh, well, that's the new category. I don't know whether I'm... Oh, well, yeah. So one of the things that we're grappling with even at the Central Bank of Kenya is avoidance of interoperability. So the question is, what has other countries done? Because there exist regulations that Airtel Money and M-Pesa should, and even banks should open up their platform for other financial service providers to use, but it's not effective as it should be. The second one is to the floor is that all mobile money providers are at the frontier of pushing digital financial service inclusion. But the issue is regressive tariffs within it. So such that, for example, in Kenya, the transactions are capped, for example, for mobile money to the bank at about 80 shillings. But this 80 shillings, it's very cheap for many people in the room. But when it comes down the tariff, it is punitive to the poor. So most people avoid using it altogether. And yet we know that transactionary usage of digital services are the ones that push the frontiers of financial inclusion. So how do we overcome that? Thank you.
Yeah, thank you very much. I am Dr. Samson Taban Joseph, Professor of Law at the University of Juba, and I'm affiliated to BOSS, Bank of South Sudan. You know what you're doing, I know most of you here are economists, but there's nothing an economist can initiate a project without looking at the legal aspects. So I've been dealing with the legal aspect of this digital financial services and financial inclusion. You know, Cracknell, I know you personally. You came to South Sudan, and I think you have seen the challenges we are facing in terms of the development of fintech or the sandboxes. I know these are words which are not familiar in law, but in economy, yes. Yeah. And you know, when you made your presentation, there are countries which are doing well, reflected in percentage. I don't know why you cut off South Sudan and is it Burundi? Burundi, what happened? This is questionable here. Yeah. There is some suspicion here. The other one, you know, I have not come across this kind of, you know, phrase, is it voluntary exclusion? What we know that is financial inclusion and financial inclusion. And that's in our documents, we have it. But there's voluntary. Where there's voluntary, you're saying that people who do not want to be party to the digital financial system, isn't it? Could you tell us the reasons? What are the reasons why these people do not want to be party to this financial, to the digital financial system? What are the reasons? You did not shed light on this to convince me. So I would like you to please, okay, shed light on this. Thank you very much.
This is what? Yeah, ladies and gentlemen. My name is Humphrey Moshi from the University of Dar es Salaam. I've been with the ERC for many years, but of late, somehow they excluded me for their own reasons. Anyway, but so long as my friend Victor is there now, I think they will include me. I am looking for inclusiveness. Good. 2 quick ones. You're talking about voluntary exclusion. Actually, if you make a deeper analysis, it's a forced exclusion because of taxation. So here, actually, the government is the culprit. Secondly, the second question, we're talking about countries, national, Tanzania, Kenya, Uganda, Rwanda. Yes, that's the national spirit. Where is the community spirit now? If you go back in the 1980s, 70s, when I was a young, handsome boy, we are more connected than we are now. For example, I could use a train from Dar es Salaam to Moshi, connect via Voi to Nairobi. Today it is not possible. We have SGR, Central One, we have Nairobi, Mombasa, is SGR, but the connection, the northern connection now, is no longer there because we are not using, we don't have that kind of infrastructure. So now we're talking a lot about East Africa, but actually the commonality spirit is no longer there. It has dwindled. What needs to be done? Because there are no infrastructure we are sharing. And I'll talk later when I make my presentation. Asante. Even the language actually, Jambo Asante. I'm the only one using it now. Although Kiswahili is our language. Asante.
Is it on? Yes. Is it still? Yeah, still morning. Good morning, everyone. My name is Elizabeth Kasekende. I am affiliated with Bank of Uganda, and I think I'm an ARC fellow, based on what Prof said. Now, thank you so much, David, for that very good presentation. About 2 issues come to mind. You mentioned that issue of taxation, which is common among basically all the East African countries. But Uganda specifically, we have laws or regulations from different entities. And what we note is several fintechs. We have several startups, but these startups end up closing for one or several reasons. One of them, yes, taxation, but the other one, the issue of the different regulations they have to ensure from the different organizations. We don't have one organization with one uniform set of regulations. So they have to adhere to so many regulations. So in your view, in your expertise, do we have a particular country similar to our countries here that has been successful in terms of fintechs and how they've managed this issue of regulations from the different entities? Thank you.
Bien, je vais changer de langage. Je suis dans un domaine où l'anglais fait surface et encore moins dans le swahili. Et je me permets de demander l'assistance de me permettre de m'exprimer en français. Je peux aller? Et merci. Et mon nom c'est M. Nimpo Boaz et je suis le secrétaire exécutif de l'Association des banques et établissements financiers du Burundi. Et je voudrais d'abord féliciter David et applaudir de mes 2 mains et de la qualité de cette présentation et remercier le consortium pour l'invitation qui nous ont accordé à l'Association des banques du Burundi. Comme vous le voyez ici dans la salle, je suis avec d'éminents professeurs d'université, et ceux qui sont sur le terrain. Je crois que sur cette table, chaque table, il y a au moins 2-3 professeurs. Et même sur ma table, je crois que c'est 50-50% pour ceux qui sont sur le terrain. Et donc, c'est mieux de se retrouver au centre de ces débats. Quand j'ai eu l'invitation, le président de l'association des banques m'a autorisé de venir et j'ai dit, s'il faut aller s'asseoir au milieu de ces professeurs qui font la recherche, je dois annuler tous mes rendez-vous. Donc, c'est pour dire combien c'est important de participer à cet échange et peut-être même interpeller le consortium à associer les associations de banques régionales parce que nous avons des défis importants que nous discutons au sein de l'association régionale qui n'a pas encore été mise en place. Et ça a peiné de venir, mais je trouve que le consortium peut trouver de bons points d'entrée pour renforcer la qualité des recherches qui sont faites. Et ça, c'était en introduction. Et je m'excuse, le français, c'est on parle beaucoup, mais la synthèse, c'est pas comme les anglophones. Donc, je vais aller tout droit aux questions à David. Alors, la question concernant l'exclusion volontaire. Quand il a parlé dans sa présentation cet aspect, et je vais me rejoindre de mon collègue du Soudan, le Burundi était moins parlé, mais je vous dis que 90% de ce que vous avez parlé, et je pensais même que nous battons le record de ceux qui sont dans l'exclusion volontaire, parce que nous avons des défis importants de faire passer le message que les gens doivent aller dans l'inclusion et de travailler avec moins de liquidité. C'est extrêmement un problème. Donc, je vais peut-être que vous partager mon expérience très rapidement pour vous aider à répondre. Pourquoi cette exclusion volontaire et pourquoi il y a ces choix? D'abord, je crois que nous avons le premier problème, le problème de cadre légal. La réglementation pose un problème sur les questions concernant l'interopérabilité et que même les acteurs, si on doit faire passer le message que sur chaque transaction, parce que vous avez parlé du partage de coûts, et qu'un agent économique et qui est client d'une banque, c'est qu'on doit prélever même 2 ou 3 ou 4 l'équivalent de shilling, ça ne passe pas. Donc, nous avons un problème sur lequel vous travaillez. Et là, je pense qu'une des solutions, je pense qu'il faut qu'on soit pédagogique sur les questions concernant l'éducation financière. Et je pense que c'est extrêmement important. Vous avez parlé de la finance rurale. Ma mère utilise le téléphone. Elle n'a jamais fait l'école, mais elle peut déjà trouver même mon nom dans son téléphone alors qu'elle ne sait pas lire et écrire. Je ne sais pas comment elle le fait. Donc, les gens s'adaptent. Là, c'est pour dire qu'il y a des expériences réussies que nous avons, mais que les défis liés à l'interopérabilité, au partage des coûts, ce sont des défis extrêmement importants. Et je pense que la question concernant la flexibilité sur le changement juridique doivent être mis à l'agenda des débats de ces différentes recherches qui se font, parce qu'il faut qu'il y ait aussi cette touche professionnelle pour alimenter les questions d'ordre théorique, économétrique. Quand je parle à mon collègue, quand il publie un article, je vois un modèle économétrique, mais je dis, mais après tous ces modèles, ça me renseigne à quoi? Il faut passer à langage maintenant, à parler à ces praticiens de terrain, comment lier les résultats de la recherche, qui sont très bons, à ce qu'on vit au quotidien. Et là, je pense que le consortium doit être pédagogique à ce niveau. Je crois que ce qui a été fait est extrêmement important. Je suis d'avis qu'il faut coordonner avec les organes de régulation. Nous avons la Banque centrale qui fait la régulation du secteur bancaire au Burundi. Nous avons l'autorité de régulation pour les télécommunications. Et là, ça te fait du chaos, même sur le plan même de la question concernant le secret professionnel, parce qu'il y a même des données assez pertinentes qu'on donne et des fois, ça pose des problèmes. Alors là, je ne parle pas des questions liées à la fiscalité sur les transactions financières aussi, qui constitue le fait que même les gens, les acteurs, préfèrent aller dans l'informel parce que vous avez parlé de l'informel, et le gouvernement a trouvé un champ qui est bien vivant parce que le secteur financier ne travaille pas dans l'informel et c'est là où on doit venir prendre ce qu'il faut prendre pour alimenter le budget. Moi, j'ai toujours crié au niveau du secteur bancaire et je pense qu'il faut renforcer nos associations et que le consortium puisse vraiment travailler avec les différentes associations pour avoir des arguments robustes pour pouvoir nous permettre d'aller de l'avant. Donc, pour synthétiser, oui, la question d'expression volonté doit être étudiée avec le plus grand sérieux. La question concernant l'interopérabilité est une préoccupation et là, on doit trouver des réponses appropriées pour pouvoir aller de l'avant. Et je plaide sur la question concernant le partenariat public-privé et sur toutes ces questions afin de passer sur les leviers sur lesquels on peut appuyer le système de marché financier. Voilà, je ne sais pas si mon message a passé et je suis sûr et je salue ceux qui ont fait la traduction et j'ai été ravi et je remercie les organisateurs d'avoir intégré la traduction. Ce n'était pas évident chaque fois qu'on venait de partir sans parler. Et aujourd'hui, j'ai pris la parole et j'applaudis à 100%. Merci.
Yes, merci, Boaz. Thank you very much. Now, David, I had most of the questions are directed to you. I think we are running short of time. I would that please you answer this. The conversation is going to continue after this. Please go ahead and briefly handle those questions. And if there's somebody online, please, Riziki, if there's a question from online, please let us know so that at least all of them can be handled together. Yes, David.
Peter, you talked about the avoidance of interoperability. This is very common. And institutions will behave in their own institutional interest, which may not be interoperability. That is what happened in Uganda with MTN and Airtel. That's what happens in Kenya with Safaricom and Airtel. So this is where you get policy intent, which is in one direction, and institutional intent, which is in another. And you have to then be aware of what the policy is trying to do, and then you have to be monitoring that policy. Is the policy having its intended impact? If it's not, change the policy. Talk to the players. Now what tends to happen is we set the policy and there's no policy monitoring. So what do we expect to happen? The institutions will adjust to that policy for their own benefit. So we have to go in as policymakers and make the changes. That's why the National Payments Vision and Strategy in Kenya, which is principles-based, then said, okay, as soon as this policy was actually implemented, there were obviously discussions that happened with Safaricom and payment fees came down. Yeah? Because that was the policy. So it's about how we implement policy, it's about how we monitor policy. So that's the first point. We talk about regressive tariffs and that they're punitive for the poor. We need to get volumes of transactions up to be able to reduce the fees. And during COVID, we actually cut the fees and that created more transactions on the system. The system itself can run on very low fees. So we can change the regressive fee. That's partly a policy issue. We did that over COVID and Safaricom still survived. So we don't need to have such regressive systems to the extent, once you get volume. So volume is very important. I think the mentioning of South Sudan and also Burundi. South Sudan and Burundi have what I think of as foundation conditions they need to get right. That's why I talked about the foundation conditions. If you want me to talk about the success of Burundi or South Sudan, get those foundation conditions correct, move forward, and I'll be talking and I'll be singing your praises. When there's not enough to talk about Burundi or South Sudan, then do I just talk about your problems and issues? You need to sort out identity in South Sudan. You need to talk about liquidity management. You need to get those conditions right. In Burundi, obviously, there are a whole series of issues. If you want financial services, you go to Bujumbura. If you go outside Bujumbura, where are the financial services? Yeah? So there are a whole series of foundation conditions which need to be met. We can talk about these individually, but let's get those foundation conditions correct. It can be transformational, but there are a lot of issues in South Sudan, for example, which include the price of telecommunication and data services. If those services are expensive, this is how digital finance works. Yeah? So, Moshi, you very much raised the elephant in the room, and there isn't a room that's big enough for this elephant, which is taxation and financial exclusion. People are choosing not to be part of the digital system because they don't trust how their digital information is going to be used. You see this very much with the Uganda Revenue Authority, which has been dipping into people's bank accounts. If you transfer money into your bank account from overseas, you can expect an email, yeah, or some correspondence. How does the URA know about this? Yeah, and once this gets into the population, they say, hang on a second, let me put my money into a eucalyptus tree, because nobody is checking who owns that eucalyptus tree. Yeah, and this is very, very, very real. This isn't. You talk about Kenya at the moment with the way the government is now taxing the population and introducing various things. The level of trust in the government is going down. What's that going to do to digital? Yeah? Digital is built on trust. If we don't trust, we don't do. Very simple. That's the heart of financial exclusion, voluntary exclusion. People are choosing not to create the data trail. And as we're becoming more and more integrated, it means that we need to have a uniform government policy related to digital, because otherwise we're not going to move forward very rapidly and very quickly. We talked about different markets that we can learn from. There are certain things that we need to evolve the way we regulate and we have policies. And this needs to increasingly be about financial conduct. In which case, look at the Financial Conduct Authority in the UK. We've talked about Twin Peaks regulation in Kenya. We can't get that in place. But instead, what we've done is we've used a supervisory approach, even if it's supervision light, for digital credit, and the central bank doesn't have capacity to implement it. So we need to have different ways to regulate. Now, talking to regulators about changing themselves fundamentally is about getting into central bank politics, and that becomes very difficult and very challenging, but it needs to be done. Then finally, if we're talking about how Burundi can leapfrog, let's have a side discussion on that. I think it comes down at the end of the day to trust on one side. It comes down to, obviously, the fee structures and making things relatively inexpensive, but it also means setting up the right digital ecosystem. At the moment, we've got a financial sector that's concentrated in one place, or maybe two. Bujumbura is the financial sector. If we move outside Bujumbura, then access declines. We can make changes through the digital ecosystem, but there's so much to do on the digital ecosystem. It comes back to the same issue with, it's not exactly the same as South Sudan, but there are related issues. That's why I talked about the foundation conditions. That's why I talked about how we move from generation 1 to 2 to 3 to 4 to 5, how we build ecosystems. If we don't have the building blocks for that ecosystem, we won't move. That's about it.
Thank you very much. Maybe just one thing to my brother here, Senior David Cracknell, or 2, 3, maybe. One, and that's for the benefit of all the forum, the entire forum. Recently, having listened to the presentation and having benefited a lot, it reminded me recently that we joined with colleagues from East Africa into an East African internet governance platform. And there also we have an African internet governance platform, and we have the global one, whereby we are saying the people who are interested, and all of us have to be interested in internet governance and technology, we have to have our voice. Because they say if you don't have a voice there to air your concern for the issues of coordination of these matters, then if you're not on the table, you'll be on the menu, ready to be eaten. That is number one. So we have to be very serious about that one. But the number two is also an issue of regulation. But you spoke about lending to, we see these small forms of credit advanced to people. They are the most expensive. And we find loan sharks operating, and they really shake the society. Sometimes even marriages go down. So we have to address these things. And number three, my senior, my brother, you know, I hadn't seen him while I was opening, the eminent professor from the University of Dar es Salaam, Humphrey P.B. Moshi, the one and only. You spoke about the connection of East Africa, and especially in the railway, but other things in East Africa generally. I can tell you that when David was saying that he doesn't like speaking only comfortable things, he also speaks uncomfortable things. There are these uncomfortable things in East Africa. President Museveni, being one of the elders here in this community, and his colleagues like the late Kategaya, and you know, when my colleagues from Uganda will understand, and the Kirunda Kivajinja, they are talking about the East Africa which was there, and the one which Professor Mosi is talking about, the one between 1967 and 77. It had East African common services. Now we are disconnected. We are integrated on paper. We have the treaty, we have the protocols, but implementation has been a bit of a challenge. And the first protocol in East Africa, of the fundamental protocols, therefore, there are 4 steps actually. You have the customs union, the common market, the monetary union, and ultimately, when God will permit, then there will be that political federation. But we started implementing the customs union in 2005. And the customs union is aimed at ensuring free flow of goods, elimination of NTBs. But NTBs are still persistent. Why? Because we are not implementing the protocol to the letter. We are supposed to have established what we call the Committee on Trade and Remedies. That hasn't been yet established. So we talked about implementation of the common market, liberation of capital accounts, and the monetary union. That is something very high up. We have to really do what needs to be done. We are pushing, and my brother, the senior, pointed out here in his presentation, said lengthy legislation process. It is actually very lengthy. I can agree. Because you have to consult with the stakeholders from all partner states, Then you come and agree. You want to, the moment they bring the bill, now you want to pass the bill. You hear comments now saying that there are some issues where they are not, maybe some stakeholders are not very comfortable from partner states. The other day we wanted to pass. I'll give you an example, and this is the last one now. The East African Financial Services Commission bill. It is a bill that aims to establish a financial services commission, and it is part of the monetary union. And it was brought to the Assembly of East Africa by the Council of Ministers. So it means it is government sponsored. If it is a government sponsored, it gets the first priority, because you give government business first priority. It means the governments have consulted amongst themselves. That's why the ministers have tabled that in the assembly. After assemblies having passed, now you get letters from 2 partner states saying that they are not comfortable with some issues, and that we should revise. How can an assembly revise a bill which was tabled by ministers in the context to which was tabled by the ministers and not amended by assembly? So there's a bit of confusion sometimes, even in the level of government officials, especially in the ministers. And I think maybe it is because of the turnovers. You find constant turnover. So you find ministers coming in, and much as they have very good interest and they have good intention, but they take long to learn. So the moment they learn, then what they were supposed to do has already elapsed. So maybe those are the few things I just wanted to share. And sorry for taking some time, but I thought it was important. Thank you. Karibu.
I think it was indeed important. I think all of us agree. Kindly, we are running short of time. Could you please, because we are going to run over. Okay, just say it so that we can finish. But be very brief.
Is it working? Thank you very much. I'm sorry to disrupt your program. Just to say that I think the discussion should also include anti-money laundering issues, because it has a significant impact on financial inclusion, the manner in which FATF and the associated entities require governments to implement anti-money laundering and CFT issues. Secondly, all our governments are struggling with increasing our tax effort. And I think we speak so much more about how taxation is impacting on digital financial inclusion, but we are not helping our governments to figure out how to improve tax collection, and appreciating the fact that progressively more transactions, both commercial and financial services, are shifting to digital platforms. And I also want to emphasize that I think our central banks are very conservative. I think we need to reflect on that. And I also want to emphasize the point that the people below, at the bottom of the pyramid, are paying much higher in terms of cost of borrowing. I think that is something we need to talk about. Finally, on the ES integration, I think the biggest challenge is that there is no political will. Thank you. There can be no political, there can be no integration, meaningful integration, without political integration. Thank you.
Thank you. So you didn't tell us your name and institution?
I was in a rush. I'm Moses Oguapos. I am Commissioner of Financial Services, Minister of Finance, Uganda.
Thank you very much, Moses. I would want us just to thank our panelists or our guests this morning. all of us would agree that they did a very good job. Marvelous, wonderful, for lack of words to describe it. Let us clap for them, please. Thank you very much. You can see how this conversation is stimulating a lot of discussions around that. We can continue engaging with them. We are having a next session. Kindly, if you want to see the program, you have a QR code. You can scan it and download the program because you have not printed enough on the tables so that at least all of us can be at par. The next presentations are going to handle much of the things you are talking about because they are specific. And later in the afternoon, we have the policy roundtable. Now, going forward, we are going to have a photo session by the swimming pool. I'm saying we are really overlapping our time. We would want to finish on time today. Kindly let us all head there. But the people are taking photos kindly. We would request you take our guests one photo, and then as the rest go to the swimming pool, I'm told it is at the swimming pool. Around there, you'll find somebody waiting, and then immediately after that, we proceed for tea break. I kindly request that we'll be here because of the photo session at 10 minutes past 11. That means we'll have 30 minutes of floor discussion or 35 thereabout because we'll have taken 10 minutes out of the floor discussion. Thank you very much. So we can proceed to the swimming pool. Pamela, kindly lead the team so that we can do it very fast. And then after that, they take their tea break. Thank you. Who is taking photo around here? Or it's already been taken? Okay. Okay, let's proceed to the pool side, please. The person who is taking photo here, kindly come as the rest go to the pool. Just hold on. The lady is coming here. Yes, yes. Yes, please.
We finish. Yeah. We finish Bluetooth receive. Yeah. It's a what? I don't know. Hata sijui. Nini? Bwajinga.
Hello? Yes, 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 yes. Kindly take your seats. Please take your seats so that we can proceed with the next section.
It's okay. So we're doing the presentation from there.
Huh? Yeah. Oh, I can't do this. Can you go?
It's okay. I don't
No, because you will need to walk here. Hey, hey, hey. Oh. Oh, no. I didn't know we're coming to see it. Of course you're coming to see it. No, what will happen? I'm going to go up, introduce. Yeah, that's better. Oh, but Jimmy is going to sit over there.
Someone can jump over the table.
You're going to? So what's going to happen? I'm going to introduce him. He makes a presentation. Then introduce you. You make a presentation. Then introduce Jimmy. Hey, who's next? I'm the last one. Oh, let me show you. Whichever. We need to remove that thing, I think.
Oh, that's the.
Ah.
It's you click, then it takes like about 2 seconds for it to appear on the screen.
I click which one?
This one is going forward, this one is going backward. Yeah. So you click once, then it will take like 3 seconds for it to appear. Yeah.
Thank you. That's critical.
Yeah.
The one for forward.
But if it refuses, then this guy is coming. You know, now they've taken the table. Now I don't have where to put my books.
Oh,
I just realized why it was important.
but that doesn't have.
Yeah, give me a second. So we can share it here.
So now shared here.
Because in the event that somebody speaks in French, we would need a... Yeah, so much better.
Let me get that back there.
Ah, okay. We were wondering whose it was.
And I have taken over your chair there. Because we have just exchanged and got mine.
So I don't know what time. Who is James? Jim.
There's a screen here. Okay. Let me pick my.
Next session. So without further ado, we've already run out of time. I'm going to request the next set of presenters to present about 15 minutes each so that we can have time to discuss, given that the first session we had a bit of limited time. So Our first presenter is Dr. Samuel Tiriongo. He is the Director of Research and Policy at the Kenya Bankers Association. He's responsible for designing and executing the research agenda and overseeing the Sustainable Finance Initiative program for the banking industry. He's an economist with over 17 years of experience, with 13 of those at the Central Bank of Kenya. He holds a PhD in economics and is a practicing researcher with proven record in conducting research on financial markets and macroeconomic policy. He has published widely in peer-reviewed research outlets on financial market microstructure, economic responses to crisis, monetary policy, and credit market analysis, among others. So, ladies and gentlemen, let's welcome Dr. Samuel Tiriongo.
Thank you. I think we can have the slides on. Thank you. Thank you very much. I think the previous presentation on interoperability was really given my work a very big boost, and I must thank David for highlighting some of the areas that I would be highlighting. So my presentation is on strengthening financial sector institutional capacities for regional payment interoperability. So I picked this up from a review of a number of papers that have been done under the current project. And we look at the background towards what we consider to be the evolution of digital finance services, some literature review, set out some objectives, and then give a summary of the findings and recommendations across the countries where these studies were done. So from the background, I think it's without a doubt that we all agree that the financial inclusion in the region has changed dramatically. And of course, the role of technological advancement has been very, very, very critical. And this, in a way, has ushered in a great divide between the old and the new economics, where the old economics was looking at financial literacy and stability and predominantly involving microfinance institutions and banks. What was critical and the anchor in this old economics was actually the choice between pursuing financial inclusion on one hand and pursuing profitability on the other. So this is arguments made by NAC, and I think David did make a reference to this, and of course extension of this was actually given by Cracknell. So the key features in the old economics was really heavy reliance on what is called regulatory interventionism, where the state authorities would have to come up with incentives and particularly to make financial institutions serve the underserved segments of the population who would typically be at the bottom of the pyramid. Then came in the new economics that is predominantly data intensive. It runs on digital automation of financial services. And this is where now the big firms, big tech institutions and mobile network operators came in to start being critical players in the financial sector. But of course, the focus here was look at pursuing profitability, but through financial inclusion. So there's a mention of the laissez-faire regulatory approaches where there's a kind of a hands-free kind of approach that regulatory institutions would take in terms of allowing some of these innovations to come through. And of course, with this then came newcomers in the financial sector play. So the new features under this and concerns emerging included the issue of increasing competition, but at the same time watching out for issues around customer privacy issues, governance standards, and I know David did mention that at length. But one thing that is important to highlight is that the new players in the financial sector now are not encumbered by high operating costs, legacy business models, and other constraints that hold back traditional players. So they come in with a new way of doing things, particularly in the financial sector. So if you look at the literature that is focused on the region, they actually give a lot of credit to the digital transformation for significantly boosting financial inclusion. And of course, many of these authors actually argue about, of course, the contribution in terms of reducing transaction costs, increasing returns to scale, better adjusted returns, particularly for financial institutions, and of course expanding the commercially sustainable production possibility frontiers. And of course, these are good for economics in financial markets. And despite these efforts, the new frontiers of service delivery continue to necessitate coming together. But of course, at the center of this coming together, if these collaborations are not checked, at the end of it all, they actually risk entrenching anti-competitive behavior. And later, of course, with anti-competitive behavior, this works at the detriment of the included populations, particularly from the cost side. So with all this, of course, the divide and the choices that have to be made in terms of the transition, and I think David did mention about this, is the approaches that have been taken on the regulatory front about the transition from laissez-faire posture to now later doing rectification and so doing. So this has actually emerged in two phases, because you look at this evolution in two phases, where in the first phase, the policymakers are cautioned not to engineer market change, while of course acknowledging the benefits of the digital transformation. But most importantly, they would be required then to just focus on removing regulatory obstacles and of course installing some enablers to market change. But when you move to the second phase, once the digital financial ecosystem is now working, and of course we can't say that it's fully working, there's still opportunities for growth, is that now there would be need for rectification to be done, particularly in terms of now entrenching interoperability, agent non-exclusivity, so that agents can serve multiple service providers, proper governance of data sharing, as well as a crackdown on mergers, particularly those that would introduce anti-competitive behavior in the market. So the success of the second and the latter stage, where we all aspire to be, is actually calling for cooperation between financial stability objectives, data governance and competition authorities, along with institutions creating a very safe distance from vested interests, so that at the end of the day, the coming together is for the common good and really to promote uptake of financial services. Against some of these developments, as we continue to see the evolutions through the different stages, we recognize that countries are at different stages of this development. But one thing that there is no doubt about is a recognition of the role of mobile money services, particularly in anchoring digital finance. I think a number of papers, we've not yet seen any paper to the contrary in terms of the role of mobile money. But of course, at the center of this is an argument, a very strong argument, that interoperability, particularly in digital financial services, even further supports financial inclusion. And to a great extent, the arguments around the future of financial inclusion would really be anchored on interoperability. But one thing that is good also to highlight is the fact that with interoperability, there is a requirement around the financial technology must be right. Shared platforms must also be well structured. Emerging cloud-based solutions must also be well aligned. And the potential to enhance interoperability then becomes very real for us. But then amidst all this is that the policy must be appropriate in terms of supporting all this coming together. And we would be looking shortly at the space of interoperability. And I think this was highlighted more by David. When you look at, there could be bilateral connections. On one hand, scheme, peer connections, the mention of PesaLink in Kenya. And then there is aspiration towards a national interoperability. But the key features around this, just to highlight a few, as David had covered this extensively, is that we must recognize that in all these countries that we are pursuing interoperability, economic arrangements differ, and I think a recognition of that would be good. The governance structures to balance between cooperation and competition then become very critical. Willingness for institutions to invest in this become very, very central. And of course, critical players having a tendency to play, to display anti-competitive behavior is also very critical. And I know in Kenya, and I think it's safe to say this, Safaricom is a critical player. I don't want to say it's playing anti-competitive behavior. Legacy platforms also at a is a major contribution, because it's in economics we speak about pre-existing conditions, initial conditions. Operational models must be safe and reliable so that we connect with that trust aspect that we're talking about. Regulatory obstacles spoken to extensively by David in the previous presentation. So as we pursue to strengthen financial sector institutional capacities and the need to highlight opportunities for effecting stronger interoperability, the objectives that we're pursuing in this paper is really to summarize some of the growth drivers and constraining factors in the emergence of digital finance, and of course, with extension to implication on financial inclusion. And again, describe the status of interoperability in the region and its potential, and particularly what goes on going forward. So recognizing that each country continues in literature to have unique features, particularly in the growth drivers or constraining factors to digital finance evolution in the country, we chose to pursue a country-level discussion of what are the factors that are critical, particularly in emerging and most recent literature on digital financial services uptake. So for Tanzania, the lack of an effective coordination platform of fintech providers, again, silos are very present, gaps in the legal framework to support the digital instant loans. Again, the lack of a test and learn, and I think this was highlighted by David in terms of, do we have sandboxes in place? And if they are there, are they well functioning? Unfavorable tax policy has emerged from literature on what we have so far reviewed. I know the work by Mwigusha and Trimat on this has actually been very central. Inappropriateness of products to the poor, and I would want to emphasize more of this because there seems to be an emergence of a lot of digital financial services that do not necessarily speak to the context of the country, do not necessarily speak to the needs of the poor and the segments that are currently excluded. So it's again a layering of products serving the same financially included population. So if we need to move to the next level of financial inclusion, then customer centricity in bringing out the aspects of product designs that speak to their needs become very critical. Existing policies and installed infrastructure remains gender neutral. So these are elements that are actually bringing out some of the policy recommendations that we see. And of course, with this, then the review of the legal framework to provide incentives and accommodate new fintech innovations become very central. And of course, starting to accommodate micro credit, the digital instant loans such as the nano credit become very, very, very important. And of course, designs of products that speak to the national realities and context then become also very, very critical, including gender component. So having the same brush painted for all becomes then would not bear the expected results. Then institutionalizing a test and learn framework to facilitate engagement on fintech innovations would be very, very important, particularly including even the generation of what you call the fintech associations. I know David did mention that we have 3 or 4, depending on how you count it, but we look at it from the standpoint of Thank you. I know I was talking about digital finance, so the digital element didn't work for me. So we look at the fintech associations to really bring out the aspect of self-regulation, the potential for self-regulation, the potential for supporting capacity, effective capacity building. Then the recognition and the adoption of regulatory sandboxes also become important. And I think David did emphasize the issue of well-organized, well-structured sandboxes with very clear terms of entry, and of course, which should be fewer if we really want these sandboxes to be effective. But we also must be able to keep alert to the emerging risks that come with these sandboxes. So as we test and learn, as we take through the innovations, through the process of ensuring that they are fit for purpose, we must also be alert to the emerging risks, because tied to the digital transformation are also the cybersecurity risks that are emerging. So for us to be able to then generate more innovations, particularly in Tanzania, then we should look at some of these recommendations, particularly to support the digital transformation from a standpoint of legal, standpoint of test and learn framework, as well as also the regulatory sandboxes. When we move to the on the Burundi side, what has been done so far, and particularly lately, are studies to really inform the mobile money adoption, mobile money use, as well as mobile use intensity. And of course, emerging literature speak to the issues around education level, membership to savings and loan associations. And I would want to highlight this more because of the what is called tontine in Burundi that is becoming very critical, because within the societal arrangements around savings and loan associations, there is great potential for increasing digital finance uptake. Mobile use also is becoming a critical element. Education features very strongly in mobile adoption and mobile use. And of course, the access to infrastructure such as electricity, as well as also to alternative power, become very, very, very critical. Then on mobile use intensity, again, issues around the connectivity between mobile banking services and the mobile services become very critical. And of course, that emphasizes the need for interoperability. So on the recommendation side and the policy implications that have been fronted, the infrastructure development become very critical, of course, in to reduce the urban-rural divide, particularly in supply of this infrastructure. Access to electricity is critical. Payments, services, accessibility is another critical element, particularly under the infrastructure development. So the spread, if there are any policies to allow a faster spread of mobile agents across the rural areas, that would be critical. Financial literacy tied to the education element, so that there is well-entrenched educational programs around boosting financial literacy, increasing awareness of the benefits of mobile money is critical. Social programs, again, the coming together as it is, the practice can actually be leveraged on to support financial inclusion through the digital platforms. Expanding use cases to encourage uptake, like for instance, if there can be regulatory encouragement to support use of remittances, use of digital services to effect remittances is also critical. And of course, to enhance interoperability of mobile money services, again, to enable customers to be able to transact across different platforms become very, very, very critical. In Rwanda, again, aspects around adoption of internet is critical. Electronic tax payments are a precondition that boosts the uptake of digital financial services. But key constraints, of course, even with the uptake of internet, is still low relative to other comparable countries. Insufficient infrastructure remain a critical pillar. And of course, to strengthen this, there is need for a review of the policies, particularly in the implementation of the digital financial policies and tightening of enforcement. And I think David did mention this, enforcement of the existing policies. To enhance interoperability, again, beyond the expanding the range of DFS to trade effect interoperability through, of course, a connection to digital wallets and bank accounts, allowing open applications. So the APIs, the large institutions in the country should allow connections through the APIs, particularly to support transactions. So the coming together, I did mention about cooperation and competition. So by opening up opportunities for connections with the large players, that become very critical. And that has happened actually with Safaricom in Kenya. And that's what has driven the digital transformation in the country. Then infrastructure development and institutional arrangement also become very critical, particularly, again, the aspect of sandboxes. Arrangements around the sandboxes should reflect the opportunities to support information, to support the innovations in the country. Consumer-centric products, again, local context is emphasized a lot, that some of the products currently being offered are not necessarily speaking to the needs of the poor in the country, the women, people living with disabilities. And of course, so the country context become very critical in the design of innovations that are coming through. For South Sudan, constraints exist also, and I know that this was mentioned. The existing papers point to a number of critical issues, of course, but with one disclaimer: the rudimentary level of South Sudan's financial sector development, and of course, coming out of conflict is actually conflict is being emphasized as, and of course, from a lack of stability standpoint, a precondition for market growth. And of course, supporting stability of the economy, supporting stability politically becomes very critical as a precondition for enhanced market development. Policy measures options include economic strengthening of institutions. I know the first mobile money service was launched in 2018 in South Sudan. And over the last 5 years, institutions have been developing and getting strengthened from time to time. And of course, even on the regulatory front or the legal front, supervisory frameworks are being established. So there's a promise that now there is even starting to look at the focus of specific segments. Can there be product designs for specific segments, such as SMEs, women, youth, farmers, and people, and the poor households? And then finally, on Kenya, I think this has been discussed at length. Of course, DFS, critical issues around affordability, agency banking points, level of education also matters to a great extent. But the challenges particularly is with the great digital financial innovations that have come through are really the prospects of disintermediation. Particularly in a system dominated by a few providers. Opportunities again lies squarely in the interoperability, particularly in enhancing combining this with data protection, the privacy, cyber security measures in the country. And I think David did mention about the latest fast payment systems that the central bank announced in terms of coming up with a working group to start looking at opportunities for bringing critical players together to inform the connection points, particularly to entrench interoperability. So beyond payments, we've seen exploring standards and APIs, opening up fast payment system. I mentioned about it, but there's still a lack of a centralized switch that would support a national interoperability. And I think one of the deliverables under the fast payment system is actually coming up with a switch. Costly bilateral agreements, and of course the system remains largely closed, which actually risks, again, continues to risk duplication, particularly of investments, and of course at the detriment of consumers. There are opportunities on the recommendation side to strengthen regulatory frameworks, particularly to promote innovations and consumer centricity. From 2019, the banking sector agreed to a consumer-centric banking sector charter, which actually one of the pillars is on consumer centricity, about a focus on customers in the design of products, service delivery, address infrastructure gaps, infrastructure development and interoperability become very, very critical, and of course enhancing digital finance literacy. So these are themes that play around across the countries. Financial literacy programs would still need to be progressed going forward. So that's a brief of our presentation, and would stop it there in the interest of time.
Thank you so much, Sam, for that great presentation. So I will quickly move on to the next presenter. We'll have our questions at the end. The next presenter is Dr. Jimmy Apar. He's currently the Director of Financial Markets. Now, previously, he was the Director of Economic Research, all at the Central Bank of Uganda. And he was very instrumental in the design and implementation of policy analysis system within the inflation targeting framework. During August 2014 to August 2015, he served as a special appointee with the IMF, helping member countries, particularly Angola and Niger, to design and implement.
Please bring on the PowerPoint. Okay, can you zoom it a little bit? I will be taking you through competition and consumer protection issues relevant to digital payments for financial inclusion. I think you have projected a different version of the PowerPoint, but I don't know if I should. There's a second one, version 2. With my name on it. I think that is the only thing you probably have, because I amended the slide. You are repeating the same thing, but I can take you through it. Since I'm the one who prepared both. Yeah. Next slide. So I will just look at the background. Some of them has been talked to by David and Samuel. And then the problem or the policy gaps in digital financial services, especially relating to competition and consumer protection issues. And then generally look at the required policy actions and then conclude. So by way of background, we are coming from the fact that financial inclusion is a catalyst for economic growth and well-being in developing countries. And the World Bank actually says it's an enabler to reduce poverty and boost shared prosperity. Next slide. David has talked about the increase in access and usage. I will just skip that slide. We go to the next one. Also, in terms of regional comparison, David talked about it, but on the right-hand side, we can also see that there are differences. First, there are differences at country level, but within country level, there are also differences in terms of the gender gap, in terms of rural, urban access and use. Next slide. So you have this ecosystem of digital financial services. This is the slide that I changed, so I'm just going to use my brain. Yeah. So you have these many users and providers, and the interaction between them has changed. On the one hand, this interaction has helped reduce competition by leveling the playing field for both the traditional banking financial providers and digital financial services, reducing the cost of competition. But on the other hand, the number of providers and users and the interaction between them could pose systemic financial stability concerns. It can also lead to competition and consumer protection issues. And that is where we are coming from. We can go to the next slide. Interoperability is one of those things that can improve competition by improving efficiency, reducing costs, and lead to more inclusion. What we note in the EAC is that there is progress on market-driven interoperability in most countries in the EAC. We have seen a movement from initially bilateral arrangements to scheme-based, the PESA-link, the agency banking, to national interoperability. If you read the work by David Cracknell, you'll get the details on that. We have also seen one jurisdiction having some sort of a de facto interoperability through a private platform, but there is no end-to-end interoperability across the financial system, except in Tanzania, in one jurisdiction. We have also seen that the presence of a mandate, we have talked too much about the 2013 mobile money guideline in Uganda that tried to create interoperability in principle, but the practice was different. So we have seen that the existence of a mandate has not translated into interoperability, which points to what David calls regulatory avoidance. There are no common standards to enhance usefulness. There are absences of effective interchange framework to ensure continued financing of acceptance infrastructure. Next slide. In terms of consumer protection, so you have a rapid growth in digital financial services coming with it heightened risks for consumers. The other thing is that digital financial services have a number of features that differ from other payment systems, but particularly in terms of operation of payment infrastructure and involvement of non-financial players. That means that consumer concerns for digital financial services differ accordingly from consumer concerns within the broader consumer protection framework for financial services. In some jurisdictions within the East African community, regulation of consumer protection for digital financial services have been conducted within the broader consumer protection frameworks for financial services. And that makes regulators miss the point that come from digital financial services. And in most cases, there are just provisions in auxiliary digital financial services specific regulation. Take us to the next slide. So there are a number of consumer concerns for digital financial services. They include issues to do with the effective disclosure of terms and conditions, fairness of the terms and conditions in terms of the level of fees, charges levied, rules pertaining to adherence, issues to do with the cancellation of recurring payments, issues to do with the security standards or, for example, authentication of rules, resolution of errors, including reversals, such as incorrect processing of payment instructions in terms of the amount or represent or timing, the issue of liability in case of errors and frauds, who takes the liability, issues around operational service standards and reliability in terms of system uptime, timeliness of settlement, and data protection issues. Next slide. Having looked at the policy and regulatory gaps, what are the policy options? So the role of authorities are very, very important and country specific. First of all, interoperability is not a solution, because we have seen many markets achieve high levels of uptake of e-money without really interoperability. Except in the recent past where we saw a number of bilateral relationships within markets. For instance, M-Pesa and Airtel Money in Uganda, MTN and Airtel. We have also seen that while many interoperable markets have seen, the markets with interoperability have seen low uptake in e-money. And these examples come from Indonesia, Nigeria, Pakistan, Sri Lanka. Also, the timing, market size and resource availability are very important. Why I bring that is the providers tend to have incentive, and that incentive is driven by profits to invest widely in capital investment, to reach even the hard to reach areas, just to hook up a number of consumers. And that leads to financial inclusion. And so it's important that you leave the market to first develop and then impose through regulation, creating regulatory environment for interoperability. And that intervention should only be to correct the market failures. Next slide. In terms of competition, for Uganda, for instance, we have adopted a tiered entry requirements. For instance, a tiered licensing regime for payment service providers with differing capital requirements. So if you have limited capital requirements, you enter at your level. And if you are a large investor, you enter at your level. Also, promote access to key market infrastructure, such as payment switches and telecommunication networks. Then we should monitor anti-competitive behaviors, prohibiting exclusive contracts that tie agents to specific providers. That can help in reducing anti-competitive behaviors. The next one. In terms of disclosure of terms and conditions, mobile money service providers can be mandated to disclose the cost of transactions before a customer completes the process, ensuring clarity and informed consent. Data provision and protection, this should be mandated and enforced by regulatory agencies. A number of countries have data protection laws. I don't know how implementation is going, but what Bank of Uganda has created is to have a data protection commissioner within the bank. In terms of fair treatment of consumers, policymakers must ensure that financial service providers treat all consumers fairly, regardless of their background. This includes women, persons with disability, people from rural areas, etc. Next slide. There should be a framework for dispute resolution, both for internal dispute resolution and appeals mechanism. The policymakers should have a robust dispute resolution mechanism to enhance consumer trust and all providers accountable. By way of conclusion then, a regulatory framework that encourages competition, protects consumers, and promotes financial literacy while ensuring affordability and accessibility is very, very important. Where possible, ensure operability, allow the market to develop and mature, and intervene to correct market failure. Successes in Tanzania was really a collaborative approach between governments, private sector, stakeholders, consumer advocacy groups, development partners, was very, very crucial for the success in Tanzania. Thank you so much for your time.
Thank you so much, Dr. Jimmy Apa, for that great presentation. And now our third presenter is Dr. Anne Kamau, who's a senior manager at the research department at the Central Bank of Kenya, with over 15 years of work experience in central banking, specifically in monetary policy, economic modeling, and forecasting. Her policy and banking career has been enriched by her experience in high-level public policy engagements at the Executive Office of the President, the National Treasury in Nairobi, Kenya, and internationally at the Brookings Institute, Washington, D.C. Currently, she focuses on monetary policy research, but continues to pursue her other interests in research on macro, financial, climate, and gender issues. Anne has published several articles in journals, discussions and working papers, policy briefs, and policy opinions. She also features in several topical podcasts. Anne holds a PhD in economics from the University of Nairobi. You're welcome, Anne.
Good afternoon, everyone. Good afternoon, everyone.
Good afternoon.
It seems like there was a short break. Okay, this afternoon I'm going to present on gender, digital financial services, financial inclusion, what policy options exist. This is part of it's a summary of many studies that have been done under the ARC BMGF Financial Inclusion and Market Development Project. So I'll be summarizing on what the studies have found and where the policy gaps and policy options exist. Okay, I'll go through the key highlights on gender and digital financial services that have been found in those studies. We look at country experiences for the East African community and the policy options available. So to start us off, we look at the key highlights on digital financial services and gender in East Africa country, in East Africa community region. What these studies have found is, one, digitization and increased use of mobile phones has led to significant transformation in the financial systems of the East African countries and have led to increased financial inclusion. What we note is that there is increase in financial inclusion over the years in all the EAC countries. For example, in Kenya, we find that financial inclusion has increased from about 26.7% in 2006 to about 83.7% in 2021. Rwanda, we find that financial inclusion has increased from about 48% in 2008 to about 93% in 2020. So financial inclusion basically has increased in all the countries in EAC. The second finding is that the geographical distribution of financial services favors urban households, yet majority of the population are in the rural areas. So majority of the women across in East African countries live in the rural areas, and the rural areas are more financially excluded than the urban areas. What that means is that women in the rural areas are prone to financial exclusion. Another finding is that there's low coverage, there's poor mobile phone networks and unreliable electricity, and poor internet connectivity and expensive internet bundles. All these are enablers of digital financial products uptake. And these products are mainly in short supply for the rural areas, where majority of the women live. Then another finding that we find is that financial and digital literacy amongst women is very low compared to men. And then we find that there's a general lack of specialized digital financial products for women, And when this is coupled with low financial and digital literacy, it has led to over-indebtedness amongst the women. And then we also have found that women prefer to save and borrow using informal channels than using the formal channels in the East African countries, in all the East African countries. Okay, when you look at the mobile money usage in the East African countries, Burundi is relatively low compared to other countries in East Africa. We find that mobile money usage in Burundi stands at around 11%, which is substantially lower than the neighboring Tanzania at 45%, and Uganda 54%, and Kenya about 69%. In 2021, these statistics for 2021, of course, there is a positive correlation in mobile money usage and uptake of digital financial products, because most of the digital financial products are either offered in mobile phones or are based on mobile phones. So the lower the mobile money usage, the lower would be the uptick of digital financial products. Another key finding is that gender gaps are higher in Burundi and Tanzania, and there is less use of mobile money by the rural residents and population of older ages. When you look at the table below, it shows the gender gaps are quite high in Burundi and Tanzania compared to Kenya, Uganda, in terms of mobile money usage, and that the residents in the rural area use less of the mobile money, and the urban people are the ones who are using more of mobile money, while when you compare the older and the young, of course the younger are the ones who are using mobile money than the older ones. When you consider formal access strands by gender, you look at there are more male who access formal financial services, which I've already indicated earlier, and the female, they mainly fall under informal and excluded for Kenya, Rwanda, Tanzania, and Uganda. Oh, can you go back one slide? The next one. Next. No, go forward. Yes. No, you skipped 2 slides. This is the problem of technology. Okay. Okay, when you look at the mobile phone ownership and access to electricity, there is a positive correlation between the mobile phone ownership and access to electricity. The more there is electricity in a country, the more the uptake on the mobile phones. So electricity becomes an important element in terms of mobile phone uptake. Let us look at briefly what the studies find about the behavior of women in terms of access and usage of mobile money. One is that women with access to mobile phones are more likely to save than their male counterparts, if they have the phones. If they don't have the phones, they will not save. Women exhibited higher self-discipline as observed in budgeting, which in turn increases access and usage of mobile money compared to men. On the regret aversion, due to lack of trust of financial providers, women are more likely to have lower mobile money access and usage compared to men. And again, female, irrespective of their residence, have a lower probability of using digital financial services than their male counterparts, even when you control for wealth effects. And this female, the females we're talking about are mainly the ones who derive their livelihoods from farming, providing services, the traders, the dependents, and the pensioners. Compared to the male, they are more likely not to take the financial services. So let's just briefly look at country-specific statistics quickly, because they've been mentioned. If you look at Kenya, the gender gaps seem to be closing on access and account ownership. However, the transaction payments remain disparate in Kenya. We have a gender gap that has been narrowing from 12.7% to 4.2% in 2021 with the latest FinAccess survey. And then the access of formal financial services and products by women has increased significantly from 20% to about 81% in the same period, while for men, of course, is higher. They have increased from 33% to about 86%. On the usage of mobile money in Kenya, it has, mobile money has increased to 81%, while mobile banking has increased to 34%. Female uptake of informal products remain very high at about 62%, while the male dominate on the banks and mobile phone. That's brief statistics on Kenya gender gaps. Gender gaps remain very high in Tanzania, while fewer females have used digital payment systems in Tanzania compared to other countries in the region. You see, while women in Tanzania are less likely than men to own a bank account due to persisting challenges, but gender gap has narrowed to about 7 percentage points. The proportion of women who have sent money using digital payment systems continues to grow, but there's still a big gender gap in Tanzania of about 22%. And we find that rural women are aware of the existence of these products in Tanzania, but they're not able to use them because they lack understanding. They avoid them sometimes due to perceived high transaction costs. They have limited understanding of how to use even insurance products or other products that are offered in the digital financial space. And they prefer to save in informal, traditional saving groups. The same way we see that Kenya also has women who prefer to save in traditional saving groups. Majority of women in Burundi live in the rural areas where financial inclusion is very low. We have about over 80% of Burundians living in the rural areas, and over 50% of those living in the rural areas are female. When it comes to mobile phone ownership and usage of financial services, only 30% of total banks and microfinance accounts are held by women. The households led by women are less likely to own a personal mobile phone compared to male-headed households, and women in urban areas are more likely to register for mobile money accounts than rural counterparts. So being a woman in Burundi, it reduces the likelihood of using a mobile phone by 9.8%. Another shortcoming is that the mobile phone ownership and access to electricity in Burundi is low, hence the mobile money adoption and usage compared to other EAC countries is quite low. So even women prefer to save in informal channels, like the women prefer tontine home and mobile money as their way of saving, and the men prefer their money to be saved in banks and microfinance. This is a common finding, at least in Kenya, Tanzania, and Burundi, that women prefer to save in informal channels than the formal channels. So gender gaps in Uganda they're there, but they're also declining. And the gender gaps in Uganda are mainly explained by income differences, which play a big role. male who are employed, persons are more likely to adopt and use mobile money services compared to women. They are amplified by differences in access to education, with fewer opportunities for women due to sociocultural issues. And the individuals in rural areas, of course, are less likely to access digital financial services due to connectivity problems. That's the case of Uganda. And Rwanda, we have demand-side factors constrain women access to usage of digital financial services. There's limited financial literacy and knowledge of financial products and services. It remains low, particularly amongst the women and people living with disability. The lower levels of education, they hinder the uptake of the financial products. The lower income levels also, they hinder the uptake of and affordability of digital financial services. And the lack of meaningful employment amongst the women also hinders the uptake of digital financial services. In South Sudan, we have the highest gender gap disparities. When you consider the M-Gurush and MTN mobile money subscribers, when you look at the customer base, only 15.6% female are registered in the M-Gurush mobile money services, while the male are 84.4%. When you look at the agents, only 11.3% are female, 88.7% are male. And the merchants, 13.1% are female, and the male are 86.9%. On the MTN mobile services, we have 6% female on agents and 94% on male agents. And customer base, only 9% are female and 91% are male. Therefore, there is need for inclusiveness of women in South Sudan and policies that have been given now on women so that they can become more inclusive. What are the policy gaps that we have seen? Because we have seen that women are the ones who live in the rural areas. Yeah, women are the ones who are mainly based in the rural areas, and they lack electricity in some of the countries. And the mobile agents are also far in some of those countries. And there is poor connectivity and expensive data bundles exist. One of the policy options is on infrastructure development, particularly in the rural areas where women live. So there is need to invest, of course, in electricity infrastructure to improve access to mobile money agents and phones so that the services can be provided. Some of the strategies that can be used to develop the electricity is to promote access to solar power, which is the renewable source of energy, as an alternative to electricity, especially in the rural areas where most women live. We can leverage on public-private partnerships for investments in digital infrastructure to enhance reliable network connectivity, especially in the rural areas. And we can encourage adoption of agency mobile model for countries that have distance bottlenecks, where mobile agents are not near to each other. We can promote affordable connectivity in East African countries to ensure that digital financial services are taken up by trying to prioritize investing in expansion of internet coverage, particularly in the rural areas, to the underserved places. We can promote affordable data plans and mobile devices such as feature phones, which can keep the battery charges for long. This will ensure that individuals and women particularly can access and use many digital financial services. Of course, the role of government is very, very critical because they have to provide the basic infrastructure on ICT, the network penetration is and also the provision of the smartphones. The policy options on financial and digital literacy for women. First, it is important to develop customized financial and digital literacy initiatives targeting different customer segments. the women, the youth, the persons living with disabilities. And when you have these customized segments of digital and financial literacy programs, we will be able to minimize financial and digital literacy gaps and the over-indebtedness amongst the women. For this to happen, of course, you need a coordinated effort amongst various financial providers and regulators. We need to intensify awareness campaigns, outreach programs aimed at increasing digital financial literacy amongst the women. We can even develop these things in school curricular programs, in the informal sectors, and also and reach out to people living with disabilities. We can have service providers to design effective marketing strategies that are suitable to the underserved, especially the rural women. That is increasing the female agents in the rural areas, featuring women in marketing campaigns. That will encourage the uptake of digital financial services. We can set specific gender equity targets for mobile money services and also mobile money uptake. So even when it comes to credit on digital financial products, we can enhance the access, usage, and awareness of credit reference bureaus, which can be important policy tool for minimizing the over-indebtedness. Just two more. On the uptake and transaction costs to attract women, we can try to formalize local saving initiatives such as the tontine by the central bank so that it can have more credibility and it can be taken up by more. Government should use delivery service platforms, digital platforms to do services like social protection payments, which can also be banked on by donor agencies who can, like World Bank, to pay the social payments through digitized platforms. This will enable people to take up the digital financial products, because if they know that social money is going to be passed through there, they'll be willing to take it up faster. It can encourage the taking up of it. Incentivize savings through mobile money by providing favorable interest rates on savings, while offering credit facilities at longer maturity profile and at lower rates. They complain that it is expensive and there's need to consider lowering rates, have differentiated products for women. The last one. This is the last one. On regulation, and it has been mentioned, of course, we need to strengthen the regulatory frameworks governing the digital financial services in East African country. We need to have a consumer-led approach to designing digital financial products and policies, which should be adopted, because providers should develop products tailored specifically for women, since this will attract women and may boost more inclusivity of women. Again, on the credit, the terms and conditions of loans that are important, that are very important for decision making. A lot of women do not understand them, and they even say that they don't read them because there's a small print and everything. They should be made more user friendly, simple, legible, and understandable. And again, we can learn from each other. East African countries, there are those who have gone before, and we can see how they have advanced in digital financial services. Those who have gone before can teach, and those who are behind can learn from those who have gone before. Thank you.
Thank you so much, Dr. Anne Kamau. Let's give another round of applause for her. I think you're all hungry. Can we please clap for our presenters? A big hand clap. So before we move on to the floor, what I was able to get from this compared to what we had in the morning, we've now brought in the gender disparities. We've brought in issues, again, the trust issues amongst the users. The issue of taxes came back again. Rural, urban areas, who's able to benefit more from these digital financial services, and also the issue of enhancing the laws in order to promote digital finance and not to discourage it. So having said that, let's have about 5 questions at a time, and so that we can give our presenters time to answer, and then we'll have another 5 questions. But please, let's make them brief so that everyone can have an opportunity. Thank you. You can go fast, and then the prof, 4. Okay, go ahead. Please introduce yourself and where you're from.
Yeah, thank you for giving me the floor. My name is Nyamweru Jean-Claude from Burundi. I'm affiliated at the Policy Research Center, CURDES, at the University of Burundi. So my question is addressed to Samuel on his presentation. When I read the title, it was like it was going to talk about how interoperability can be enabled within countries in East African community. But listening to the presentation, it was all about in country or national interoperability. So I am asking a question about to what extent is interoperability is possible within countries, because I'm just reflecting what is happening in Burundi. If you look at what is happening, people are sending money via mobile money from Kenya, M-Pesa, from Kenya. They are sending money via Momo from Rwanda to Burundi, and the other way also is also possible, and informally. And this is a signal, it signals the perceived usefulness. So people are really willing to see that kind of service as far as digital financial services are concerned. So to what extent is that possible? Maybe the question is also to Honorable Makame. How is the financial bill of East Africa to permit this to happen? Because it is really crucial when we talk about East African integration. So payment should also be digital in that kind to enable East African members to communicate in terms of finance. Thank you.
All right, thank you. Yes, Professor?
Okay. Yeah, it's regard with the first one. Actually introduced itself as the Kenya Bankers Association. I would have been happier if I say East African Bankers Association. That notwithstanding, it was talking about old economics vis-a-vis new economics, at the same time old players vis-a-vis new players, as if the two are substitutes. They are not. They complement each other, actually. So what is happening is broadening the menu. That's the issue. There is a case, somebody talked about women indebtedness increasing. The main reason I see and observe is actually you borrow money for a certain purpose, you end up buying a more expensive, more modern phone, or you go to make your hair. You see now, in that case, you can't pay. The last one, I would have been happier if she were to disaggregate by education, seeing whether being a primary school leaver, secondary school leaver, tertiary institution leaver, what's the difference across the countries, rather than using different data sets or indicators for each country. And if you use different indicators for each country, definitely you can't compare the two or the three countries. Those are my brief questions or comments.
Yes, thank you. I think the next one was this gentleman, and then Peter. Then we'll take maybe David, and then we'll get some answers.
Merci pour la parole. C'est Boaz Nimpe, secrétaire exécutif de l'association de banques. Bon, je pense qu'on va retourner à l'école de la francophonie au niveau de l'EAC, sinon. Merci pour la parole. C'est Boaz Nimpe, secrétaire exécutif de l'association de banques et établissements financiers du Burundi. Évidemment, j'avais beaucoup d'observations, mais le temps est très limité. Je voudrais plaider que pour les organisateurs, on puisse vraiment avoir le temps puisque les 3 sujets qu'on vient de suivre sont des sujets extrêmement importants et qui sont au cœur de notre métier en tant qu'association de banques. Alors, j'ai 3 questions et je vais adresser à chaque intervenant une question. Et je voudrais commencer par Sami Tirionko de l'association de banques du Kenya. Sur la question concernant les défis de l'interopérabilité au niveau régional. C'est exactement vrai le topo que vous avez fait sur la situation pour le Burundi. Mais le problème qui est posé quand il faut aller au niveau régional, il faut aussi interroger la qualité de nos switches nationaux. Pour le Burundi, nous avons un switch national qui peine à être mis en place. Déjà au niveau de l'association des banques, je ne sais pas si on a failli à notre mission, en commençant même par l'interopérabilité monétique, même au niveau national, ça n'a pas marché. Et la Banque centrale a dû reprendre, parce que même le message, quand il faut revenir sur les questions concernant l'éducation financière, les agents économiques ne comprennent pas que quand je dois aller retirer sur le guichet d'une autre banque, pourquoi on doit me prélever de l'argent? Ça, c'est le premier point. Le deuxième point de problématique, c'est le paiement mobile. Parce que notre switch aussi n'intègre pas les services financiers numériques provenant d'autres opérateurs de téléphonie. Alors maintenant, quand il faudra s'interfacer au niveau régional, c'est là où on a des défis importants pour pouvoir suivre l'exhaustivité des transactions. Comment R-Switch ou B-Switch au Burundi ou Ken-Switch au Kenya, comment on peut capter toutes ces transactions? Il y a un problème. Évidemment, on peut se taper les mains parce que dans le tableau qui a été brossé, le Burundi semble être en retard dans tout. On est vraiment en retard en tout, mais on finit par apprendre sur le terrain. Et si on n'arrive pas à développer l'interopérabilité au niveau régional, je crois que c'est ça comme défi important qu'il faut soulever. Que faut-il faire pour que l'interopérabilité des paiements au niveau régional puisse être faite? Et c'est là où je rejoins la remarque qui a été donnée, qu'on aurait dû aller au-delà pour comprendre maintenant les défis au niveau régional concernant l'interopérabilité au niveau de nos switches que nous avons. Et bon, peut-être qu'il n'y a pas de réponse, mais je voudrais quand même saluer la question concernant le renforcement des capacités sur la question concernant l'inclusion financière, l'éducation financière. Ce sont des questions qui sont importantes, qu'il faut mettre à l'agenda de nos recherches et comprendre pourquoi on n'en arrive pas là. Et sur la question qui a été développée par Dr Jimmy, j'ai loupé un peu une partie de votre présentation. Je sortais pour m'énergétiser un peu avec du café noir, mais comme j'ai de la force pour aller tout droit à la question, c'est le cadre légal et sur la protection des consommateurs. Quand on va dans les services financiers, je ne sais pas si ça existe au niveau de la sous-région pour d'autres pays, la Banque centrale au Burundi veut que on puisse ne pas payer les services liés pour mieux protéger le consommateur, que les services soient gratuits. Alors, je ne sais pas si on peut travailler dans un secteur financier et peut-être promouvoir de la gratuité sur les services. Ce n'est pas l'expérience qu'on a au niveau d'autres pays, mais cela pose des défis assez importants parce qu'en mettant en place un cadre légal, soi-disant qu'on veut protéger le consommateur, et qu'en protégeant le consommateur, que c'est là où on peut augmenter l'inclusion financière. Ce sont des questions que je me pose. Je ne sais pas si ça existe pour d'autres régulateurs au niveau régional, mais je trouve que sur la question concernant la compétition, la protection des consommateurs, nous sommes dans un secteur où on doit aussi surveiller notre compte d'exploitation et faire du profit aussi, parce qu'on ne fait pas aussi de la gratuité. Alors, pour la troisième question, le genre, Dr Anne, j'aimerais bien que vous puissiez être invité au Burundi, parce que les questions que vous avez soulevées pour les femmes, je vais vous partager mon expérience personnelle sur les politiques mettant en place pour favoriser l'inclusion des femmes. Depuis 2021, le gouvernement du Burundi a créé une banque de femmes. Cette banque, j'étais la première personne à combattre contre elle. Parce que je disais, mais gouvernement, pourquoi voulez-vous créer une banque de femmes alors qu'il n'y a aucune banque qui n'a pas eu un crédit à travers le financement bancaire classique? Alors, évidemment, je n'ai pas été entendu parce qu'il y avait aussi une question de politique pour pouvoir aller dans les élections et collecter le maximum de voix pour les femmes. Mais 3 ans après, je continue à croire que je n'avais pas raison. Pourquoi? Annuellement, le gouvernement a voté un budget de plus de 20 milliards pour mettre dans la banque de femmes et permettre aux femmes d'emprunter à 10%, là où dans d'autres banques commerciales, on emprunte à 16, 17, 18%. De manière que, et là c'est là où je reviens sur l'impact de la politique, chez moi-même, le genre est bien développé parce que j'ai 3 femmes, non, j'ai une seule femme et 3 filles. Je m'excuse parce que j'ai... Bon, là, je disais que chez moi, le genre était au beau fixe. Mais quand je demandé à ma femme, mais il faut aller à la banque de femmes parce que tu pourras emprunter à 10% pour financer ton activité. Bon, elle ne voulait pas parce que elle, le risque, c'était un problème. Mais quand je lui ai dit que si tu ne vas pas emprunter, moi je vais porter ta jupe et aller emprunter moi-même et bénéficier de 10%. Il a fallu alors se lever et aller à la banque et là obtenir un financement. Alors, donc, les politiques à mettre en place pour la banque des femmes au Burundi a inversé les données qu'on avait sur les questions d'inclusion financière. Et 3 ans après, je crois que dans les données que vous allez avoir pour l'année 2024, je crois que la Banque des femmes a fortement influencé les données en termes d'impact sur l'inclusion financière pour les femmes, mais aussi en leur permettant, pour les femmes rurales, de se mettre en regroupement et de bénéficier encore des taux réduits s'ils peuvent aussi obtenir les transactions à travers les plateformes mobiles. Donc, c'est vraiment une expérience que je voudrais partager et je considère que, et je reprends pour le compte, pour ce que vous avez développé, ce sont des politiques qui peuvent impacter le développement de l'inclusion financière pour les femmes et cette expérience m'a fortement interpellé et je voudrais vraiment la partager avec ceux qui sont ici. C'est dommage qu'on n'a pas assez de temps, mais je trouve que ce sont des sujets extrêmement importants. Et pour terminer, nous avons pris la bonne leçon, et c'est peut-être l'attention de l'Association des banques du Kenya. L'Association des banques du Burundi vient de signer un cadre de partenariat avec l'école doctorale de l'Université du Burundi pour que ces études que vous publiez puissent nous inspirer. Parce que des fois, on publie et on laisse dans les tiroirs. Maintenant, nous allons, et d'ailleurs, primer toutes les études que nous estimons avoir eu un impact dans le rôle de financement de l'économie par les banques commerciales. Je vous remercie.
Right. Thank you for that. So, Peter, and then David, and then, okay. The last one for the lady, and then we can get some answers.
Thank you so much. First of all, by the nature of the papers that were selected in this session, they are greatly insightful, and I thank ARC and the conveners for choosing this because they cut across the regulator side, the consumer side, and the association side, the demand, supply, and the regulator side, which is very good. So the first comment is that the issue of gender in the digital financial services is very pertinent, which was touched onto by Anne and his analysis of the paper. So the issue of market conduct, yes. So there is proliferation of financial services, and it's fashionable for any country to have them. But are they relevant? So the studies that we have seen in the EAC are such that most of these financial services are not relevant, or rather their relevance is small, such that they don't improve the incomes and elevating poverty as much as we would desire. So how do we have to increase the relevance such that they make difference in people's, in women, and especially the excluded socioeconomic outcomes? So the next issue is, from the regulator's perspective, the issue of sandboxes. All regulators are confronted with the issue is, how do I grant equity to all my customers? And from the regulator's perspective, customers are the licensees. So how do we choose it? It is a very difficult question. So for example, for the central bank, we say that we can't have sandboxes. The reason is this: what is the criteria that we use to select A from B? Then we have constitutional issues. So for us, on this other end, as generators of knowledge, we need to see how we can encourage innovations in the financial sector to leapfrog inclusion in a manner that we encourage innovations that are pertinent to our markets. And then the issue of market conduct. We need to see how all the financial services are customer-centric. How do we treat the consumer of financial services? We know that between the regulator and the financial service provider on the table, the consumer of financial services is missing. The regulator is supposed to protect his interest, both of them, because we have to ensure sustainability in providing financial services. We have to make sure that they are relevant, but the voice of the consumer financial services is always missing, and that voice is sometimes filled by the politician by establishing, for example, the Women Enterprise Fund, these political financial services and products. So they somehow tend to correct the market failure, because the market doesn't cater to all the categories of the people, but financial products that are politically motivated, sustainable. In most of the cases, and empirical evidence has shown that they are usually not sustainable. So the financial service providers can pick from where the politically instigated financial services, they can fill that niche. But how can they inform that switch? By having good data. For example, if you go to the banking sector in Kenya and ask them, how many loanees are a female? Rather, what we call the loan disaggregated data by gender. So do we have it? How many banks are able to do that? So this one I will ask Samuel to make comment on it, because it's only by having data driven, both on the demand and supply side, that we are able to provide financial services that are good to them. So by having this data, we know that we can collect financial inclusion data on the demand side, but we can easily just change the system a little bit and training to collect supply side data by gender, by geographical. We know geographical distribution of financial services in the bank sector is possible. What about other financial services providers? So probably the knowledge base on the provision of other financial services, for example, insurance, pensions, and savings, and even microfinance services, is missing. So focusing that area will enable us to have a holistic view of the developments in other categories of financial services, which can easily help to both increase inclusion and close the gender gap, as well as urban-rural divide in access to digital financial services. Thank you.
Thank you, Peter. David?
Okay, just a couple of quick comments. Thank you very much, Samson, Jimmy, and for your presentations. One thing I'd like to say on gender, please, we have a policy paper already on gender, which is quite good in terms of asking questions. That's Flora Mayamba's paper in the framework studies. And so she creates a list of questions we should ask when we're talking about gender and financial services. Please refer to that. It'll actually help. The second is on consumer protection. I think that we can learn from the exposure draft that's been produced by the Bank of Ghana on disclosure and communication around digital finance. This is a relatively new document, and it goes into how we communicate on digital financial services, so that's important. On engendered data, which I think is also very important, I was engaged in projects to get engendered data in Uganda and in Zambia. So there is a process for doing this, which is reasonably well acknowledged in terms of central banks driving down into the banking sector to enforce engendered data. So there's a process for that. So those are our three very quick contributions.
One last one before we allow the team to...
Thank you very much for the opportunity. I want to thank the doctors, Dr. Anne, Dr. Jimmy, and Dr. Samuel for this great presentation. And also the panelists in the morning. They also gave us very great presentation. I'm thankful to that. I want to concur with most of the speakers here. And my question, actually, it's about the financial inclusion and market development. Should it be financial inclusion, or should it be market development and financial inclusion, or financial inclusion and market development? So which one comes first? Because I feel that market development, it is important, because without the market development, we will not have financial inclusion. And we will not even have the interoperability. We will not even think of finances, because what brings finances first, when we talk about finances, means money. So what brings this? It is when there is market, when there is something to do with the money. So now we are talking about financial inclusion and market development in East Africa, East African countries of East African community. So I want us to think critically. Should the East African community focus on how to develop the markets in East African countries before we think of financial inclusion? Because our markets are very poor. Our markets are not developed. So how are we going to actually develop, have that financial inclusion or digital services among our communities? If our communities have no money, they are poor. Most of our communities are actually rural-based. They are rural-based. And their impact on agriculture, and even subsistence agriculture, whereby they don't produce much, produce. Even what they produce is not enough for them to eat. So I want a clear explanation from the panelists to tell us how are we going to do that. what are the mechanisms that are necessary for East African communities to develop their markets. Moreover, we want representative from East African community, the body, to come and listen to us here, to be part of us, to listen to what we are saying, because they are also policymakers. They meet, as, head of states, they meet. So they need to know where the problems, are and how to solve. Thank you.
Thank you. I see we have one question also on from the members online. This one is from Juliet Miner. She says that she's interested to get a perspective on enabling this interoperability for success of the African continental free trade area and intra-African trade, especially between regional blocks. We talk of harmonization of laws, but what are the specific regulatory barriers? What are the necessary steps that can be taken to unlock these at regional and national levels? What is the ESC currently doing in this regard? That is engaging with other regions. So having said that, I think, there are a few more. Okay, this one goes to Sam. How does cybersecurity, how has it been incorporated in the financial services, especially if we have APIs with players in the market and the regulators or central banks? Let's take one last one from the online. The last contributor, I think that is Anne, mentioned a document that one could rely on when talking about gender in financial inclusion, but I didn't get the name, so I think you can clarify that. So you have quite a number of questions, and you stand between answering and their lunch. So if you're still energetic, we still have time. Otherwise, if they start yawning, I close up for lunch. So over to you, Sam, and then Jimmy, and then Anne.
So I'll keep it brief, just in the interest of time. Interoperability, I think this was from Jean-Claude. Interoperability within country and versus regional. So it's a question of the readiness to go regional when in country is not ready, and then that means that the same challenges that would have within country would actually affect the inter-country interoperability. So I think it makes sense to pursue stronger interoperability within country as a precondition for extending it out of the country. Then Professor Monshi talked about old players, new players, whether they are replacement. And I think it was it's a development of thought that in the older economics, we were talking about the divide between financial inclusion and pursuing profitability. And I think many of the financial actors were pursuing more of profitability and at the expense of financial inclusion, particularly from risk perceptions. But now it's looking at pursuing profitability through financial inclusion, meaning pursuing more profitability through volumes rather than bringing everybody on board. So it's a development of thought rather than a replacement of a school of thought. So the challenges in the interoperability, I think one of us has asked, and I think we had painted a picture of issues around governance, considerations between cooperation, competition, issues around anti-competitive behavior, because if you are in a monopoly of sorts, then the unwillingness to share market share is something real. So there must be benefit promised at the end of it all, and particularly where interoperability means lower revenues, if so to say. Regulatory issues, again, readiness, I think that was highlighted earlier in terms of regulatory institutions being ready to allow interoperability, and who governs the system when they are interoperable, and particularly where regulatory agencies are coming from different organizations. So if they are all under one regulator, the better, much easier. But if it involves, say, for instance, competition authority, and it involves on another arm, communications authority, it informs the central bank. So the coming together of those regulatory bodies. Economic structures, realities around economic structures also become very, very critical. Issues around data sharing. Is there privacy enough? Is it safe? Is it accommodating everyone? Consumer privacy, and particularly now when each country is installing very strong consumer privacy laws and data protection laws. So even the pursuit of interoperability now would have to be taken a notch higher in terms of the considerations that need to be put in place. I think, Peter, you mentioned about whether it's possible to effect regulatory sandboxes and considerations whether regulators would have to prefer one over the other. There's opportunity, particularly then, to look at, can private sector lead the interoperability journey? Can they come together as private sector actors so that for regulators it's basically just to give permissions where there is need to do that. Gender products, and I think there was mention of, do we have supply side data coming out on the gender products? And I think this is something we have recognized as an issue at the center, at Kenya Bankers Association. And over time, because of studies that we have done on gender, banks have actually realized that it's possible to to create products that are gender sensitive. And one bank I would mention without fear is Stanbic Bank has actually launched a product for women only. It's called Dada, and is doing pretty well. And also the collaborations with other development finance institutions. Now we have a partnership with FSD Kenya to look at gender disaggregated data for enterprises. And we just came together, and 13 banks are going to pilot that going forward. So soon we will have publications coming out on gender features, particularly in lending, current practices in lending to women, lending to men. And then I think there was a question around interoperability for trade across blocks, and I think I've answered it in terms of my preferred opinion is that we would first do interoperability within country, and that becomes a very necessary and supportive condition for inter-country, inter-blocks operability. And I know there are many efforts around the African Union and the EAC, particularly, and a lot of sensitization around joining in to the Pan-African payment systems mechanism. But of course, within country obstacles would still be a challenge, particularly where systems are not developed enough to onboard other systems. So before you connect to others, I think the internal readiness has to be availed. Cybersecurity versus APIs, and what we do because of the digital financial transformation that has happened in the country. At Kenya Bankers Association, we have a committee kind of monitoring cybersecurity emergence across the banking system, more like on a real time. And whenever there is an attack on one entity, the message goes round to all financial institutions to either suspend operations in a particular space when there is attack described of a particular nature on the cyberspace. So that helps to avert systemic challenges whenever there is an issue, and also banks are able to upgrade their systems as a result of the attacks that have actually come through. So whenever we take these strong steps towards digitization, it's also important to take strong steps towards safeguards in the same space. Then I think from Boaz, comment around whether you have a women bank with providing services only to women. We also have Kenya Women Finance Trust. It's all dedicated to the customer base is women, and that has been in existence for more than 10 years now, and is also doing very well. But that does not preclude women from accessing other banks for the financial services. So it's a journey that we take, and I guess we take a step at a time. I don't think there's any other that I've... Oh yeah, there was a question around market development versus financial inclusion. Which one should be the other? And I think we describe this as bi-directional. There's feedback from market development. You can create products to promote financial inclusion, but again, with promotion of financial inclusion, feedback onto market development. So it's a two-way mutual relationship. Thank you.
So I will go in reverse, start with my sister from South Sudan. Whether financial inclusion lead or lag financial market development. I want to start by giving you the experience for Uganda, where we came from very high macroeconomic instability, inflation being around 200%, growth was in negative territories, and the performance of the banking sector, the banks which were there were performing very poorly. And so probably market development is very, very important first, but macroeconomic stability comes first to build confidence generally within the population to start to save. So that, because if they save and inflation runs away, then they are going to lose value. So they need macroeconomic stability, but later on it is there is a feedback loop from both sides, because you need a developed financial sector to transmit monetary policy to the ultimate objective. So market development is very, very important. And then when you come to digital financial services, David talked about the foundation that you should do in terms of infrastructure, connectivity. Mobile phones play a big role, regulatory framework, and many others. And then there are growth factors like interoperability and all that. So market development is very, very important for financial inclusion. David, thank you for that guide on the paper to look to from Ghana. I will probably have to get the title, but I would like to see the paper. Thank you so much. Peter, regulatory sandboxes. David talked about it, especially for Uganda, where there is a requirement which is very stringent, first to enter. But I want to look at it differently. Probably, are we being too overzealous? Do we really need regulatory sandboxes? Is there no other models? Or can't we just say, okay, let's wait and see? Because, you know, these regulatory sandboxes, first of all, the regulators themselves, I don't know if they have the capacity to closely monitor the development the fintech development and identify risk areas, things to do with the sandboxes being a stamp of approval, and which fintech used for acquiring capital, startup capital. Those are the criticisms, and people are proposing other methods of incubating innovations than sandboxes. So probably that is probably a research areas. It's a new development originated from the Financial Conduct Authority, but is gaining a lot of value throughout the world, and limited research has been done in that area. I will probably end with the, I don't know whether it was a question or an observation from Mr. Boas, whether a regulatory framework is necessary. I would say it's very, very necessary for consumer protection, especially that digital financial services tend to be a little bit different from the traditional financial services. But a regulation in itself, in principle, will not deliver. You need implementation and enforcement, and that is what is mostly lacking in most of our countries. Most countries already have consumer protection, the wider market and financial sector. Some have provisions for digital financial services, but the implementation is what is lacking. Thank you very much.
Okay, I will touch on gender issues, and I'll start with a question that was asked online on which paper in particular to refer to. The paper that gives gender issues is by Flora. It's on, the title of the paper is Expanding Digital Financial Services in East African Community with a Gender Lens. It was part of the framework papers, so you can look for it. That is the paper that gives you a lot of gender issue questions that are being asked for. Professor asked a question about the level of education and indebtedness, and that would have been a better way of explaining indebtedness by looking at the level of education. Actually, part of the papers that were done in this series look at digital financial services and implication of financial literacy on gender over indebtedness. That paper looks at different levels of education and how it impacts on gender indebtedness and the ability to borrow, or they are not so able to borrow. It looks at those kind of questions, and they look at the level of education. So that's another paper. There are many papers that were done in this area. Another good paper is on by Kasim, that's engendering financial services in digital financial services. I like it that Burundi has a bank for women, and even Kenya has a bank for women. But and you can see women still fear to go to borrow in those institutions. What we have found out, even with the banks for women, they'll still fear. You know why? Because they're not educated. They don't know what the benefits are. Actually, they fear. They say that if I go to the bank, they might take all my money. They're not aware. And even when we have been doing the financial access for Kenya for 2023, and I happen to have gone to the field at least to go through one questionnaire. If you go inside in the villages, somebody does not even know the products that are available. They have never heard of a pension, a contribution. They have never heard of insurance. They don't know they can insure their crops. So there is a lot of lack of knowledge, and there's a lot of myths that need to be dealt with, because they fear coming to do formal. They say that they can be, their money can be stolen. They have had people's money are stolen, you know. So they are fearing. There's a lot of myths That's what I'm trying to say. The bottom line is financial education is lacking. They need to be informed. There need to be some literacy. And the service providers should also market their products and ensure that women are aware that these products can help them. They are not dangerous. They can help them. And they are better off with the products than without the products. So basically, that is what I think Peter asked on financial services products. Are they relevant? Here I would like to blame the regulator because innovations are always going ahead of the regulator. You find that, I can give an example of Kenya. We had this...
Sam, Jimmy, and Anne. Let's give a round of applause.
Thank you all for gracing our half day of this forum. We have now come to the time where we are going to have lunch. I think whoever doesn't have a voucher will get to me, and I'll give him or her the voucher. But before you go for lunch, I think you'll get something from Sheila. She'll be at the back there. I'll show you where she is. Riziki, can you see Sheila? Yeah, then I will guide you, I'll lead you to where we are going to have lunch. Lunch is served on first floor. Sheila is back. She's at the corner. Sheila, please raise your hand. Sheila, please raise your hand. There she is.
Ready to have the most power over your music? Settle into your favorite playlists and albums with every song flowing into the next, thanks to uninterrupted music listening. There's no one way to listen with Spotify Premium. Tap the banner to learn more.
Good afternoon. Welcome to this session on policy roundtable discussion, and I'll be moderating this session. My name is Peter Wamalwa from the Central Bank of Kenya. Given that Professor, the Executive Director for ARC, that's Africa Economic Research Consortium, has introduced new categories of membership to the ERC. I was hoping to be associate member, So because we share a long history, Africa Economic Research Consortium, student and as a lecturer from the university, and now as a policymaker at the Central Bank of Kenya. So first and forward is that most of the panelists in today's and this afternoon session, we share a lot, from the advocacy for financial inclusion to policy making and from academia. So fast forward, we know that the issues of financial inclusion are pertinent to us because they affect trajectory of socioeconomic development. They are well anchored in the SDG, that is Sustainable Development Goals. Secondly, they are very important to all the regulators, the central bankers, be it insurance and the pension funds. And thirdly, they are very important for the people in the academia. And that is why the panelists in this session span across the policy making, the academia, and the world for the pressure groups in the name of AFI, that is my friend Kennedy Komba. So, and then we also have development financial institutions, that is Uganda Development Bank Limited. So we have a speaker in that capacity. So to begin with, is that we would like to have clarity on the issues to discuss with when it comes to development, digital financial inclusion, digital financial services, and financial inclusion. In particular, digital finance. You see there's a divide over there. So Professor Moshi, how I wish that he should start, he should be the first one to speak on these issues because he has worked on it. He's capable. So to just read his profile and before I unleash his potential to clarify these issues, is that Professor is currently a professor of economics at School of Economics at University of Dar es Salaam, which I fondly call UD. As a founding director, Center for Chinese Studies, holds a bachelor's and master's degree in marketing and finance, respectively, master's degree and PhD in economics from University of Dar es Salaam and University of Manchester, Münster, Federal Republic of Germany. He has served as a visiting scholar at IMF, Washington, D.C., and the University of Mannheim, Federal Republic of Germany, and South China, University of Technology. Professor Moshi has interests in public economics, macroeconomics, financial finance, corporate governance, private sector development, China-Africa socioeconomic relations, and policy formulation and analysis. He has authored and co-authored and edited 5 books on economic issues and published more than 75 scholarly articles in reputable international journals. He has been a consultant to a number of international, regional, and national organizations, as well as numerous private corporations. He has served as a research fellow at IMF. He was an economic advisor to the Minister for Finance of the United Republic of Tanzania between 1998 to 2000. 2004, he was the director of President Economic Policy Advisory Unit and Chief Economic Advisor to the President of Zanzibar. He also served as the chairman and board of various corporate boards. So, Professor, from the vast experience and knowledge in this field and the issues that we have discussed in the morning, I know you have pertinent issues that you wish to put forward. So I welcome you to make
your powerful clarification on these issues before we proceed. Thank you. The floor is yours.
Ni hao. Guten Abend. Good afternoon. Jambo. I'm happy to return home after a long time, a long while. Now I can claim that I am no longer excluded. I'm now being included in ARC program. I'm very happy about that. Listening to what we've been talking since morning, I have got a few questions which I wanted to pose. The first question is, which development paradigm is informing our discussion on financial inclusion? Is it the neoliberal paradigm, which assigns a very minor role to government? That is, the role of government is that only of putting the policy around as well as the regulatory system. In other words, they say the work of the government is that of facilitation. This is the neoliberalism. And the neoliberalism believes in cut and paste, one size fits all. So what the Americans are doing, what the Chinese are doing, what the Europeans are doing can be done in Africa without respect for diversity of cultures, diversity of civilization, diversity in terms of the level of development. Or the other one is what we call developmental state paradigm, which the high-performing Asian countries have been adopted. And in the last 40, 50 years, within a generation, we are seeing that what they have achieved within a generation was achieved by Americans in 150 years, which have achieved in Europe by Great Britain in 250 years. And that one believes what we call developmental state paradigm, believes that the role of the state cannot be that only of facilitating. It has to be also a provider, meaning you provide in order to not to suffocate the private sector, but also to facilitate the private sector. Recently in Tanzania, the government built a flyover in Ubungo. That's the government. But now you're asking all those days, how come the private sector didn't do it? But the user of that flyover, 99% of the vehicles which cross there are the private sector. Meaning here, the government did facilitate and did not suffocate the private sector. So that is one of the clarities we want to see. And now, when we are talking about borrowing a leaf from countries' experience, then that means you are not adopting by cut and paste, you are adopting and adapting to your own circumstances. We say Africa is one, but Africa we are very much different. Kenya is not Tanzania. If I go to Kenya, for example, it's at 8 a.m. 8 a.m. in the morning, people are rushing to work. You meet your uncle, say, hello, uncle, you go. In Tanzania, say, hello, uncle, let's have a cup of tea first before you go to work. So the culture is very different. Even the political culture in Kenya is more dynamic than the Tanzania one. See what happened recently. Eh? But now I don't want to borrow a leaf from that context. And Africa is different also. I went to Nigeria at 5, 6 a.m. We are having somewhere having a cup of coffee, others were having a glass of beer. Always, of a sudden, we saw an empty bottle being blown about with wind. I was the only one seated. Then I said, what is that? They said that could have been a Boko Haram's bomb. Eh? Yeah. Then they said, you must be coming from Tanzania. And that is true. We've been enjoying peace and tranquility for so many years. Now, from the presentations, we've been talking about, yes, we are seeing the gap closing as far as financial inclusion is concerned. But we should not only focus on financial inclusion. We have to look at the rural-urban gap. Is the rural-urban gap closing in terms of poverty reduction, in terms of putting the recycled infrastructure, physical infrastructure, in terms of housing, so that even if you are growing, the economy is growing, then it becomes an inclusive growth, benefiting all of them. That's why in China they talk about common prosperity. So those are things we have to look into. And we have been talking about the problem of electricity. In Tanzania, about 2 or 3 months ago, we are in black spot for almost 6 months. But now I've been asking myself, what is happening? How come? Then we are now proud that we have built the Nyerere Dam. We have overcapacity in terms of power generation. But we are forgetting that it's dependent on water, rainfall. But with the problems of climate change, then anything could happen. Suppose it doesn't rain for the whole year, what is going to happen to the dam? Surprisingly, we have 12 hours of sunlight. Surprisingly. Eh? But the consumption in Africa, where we have so much sun, of solar energy is less than 2%. Can you imagine? We have got, in Tanzania, 8 kilometers of coastal line. There is no single wind generator of power. So what is happening, Jesus Christ? What's happening? How come we are so much dependent on the water? It's high time we diversify the source of energy, not only in Tanzania, in Africa. And we are proud of, we're talking about mobile phones now. Yes, but the problem of electricity is still there. But the good thing about these renewable energy sources, wind and solar, they can be localized. You can have it at your home, you can have it at school, you can have it in your dispensaries. How come we are not seeing these things? What is wrong with our politics? Another area now, we are seeing, yes, papers were presented, and I was expecting people to talk about East Africa as a region. But they start talking East Africa, then everybody goes Kenya, Uganda, Tanzania, blah, blah. Then I'm asking myself, where is that corporate community spirit? Where is it now? And we came to say, my friend said, oh, you know, the problem is politicians. There is no political will. And that's true. And the politicians in this region, and Africa in particular, they don't walk the talk. They sleep a lot, they say a lot, they say, achana now. When they are back to Tanzania, when they are back to Kenya, they say, after all, my voters are Tanzanians. My voters are Kenyans. My voters, we should now rekindle that spirit. So that next time when we come here, we find guys talking about, East Africa Bank Association, East Africa digital regulators, and blah, blah, blah. Without doing that thing, man, we are going to, we are going to face the same problems. For example, most of our countries now are 60 years old since independence. And at independence, the GDP in China was 1/3 of that of Africa. 1/3. Today, China's GDP is 13,000 times that of that of Tanzania, blah, blah, blah. Our GDP now is, per capita income, sorry, is about $1,000 US. Per capita income in China is 13,000. By the way, I'm a founding director of Center for Chinese Studies. That was my own idea, to study the economic and social relationship between the continent and China. And I travel to China more frequently than I go to my village. So for those who have been in China, for example, recently, you have been in China, who is interested in going there? Okay, I'll put you on my list. I'll put you on my list, and God willing, in the next few months, you will be there. You'll be surprised what you are going to see. And again now, the issue of the role of the state. When the guy was presenting, as if when we was talking about old players and new players, as if the two were substitutes. They are not. Actually, they are complements. Meaning, therefore, then, there is still a role for the state. Rural development banks, village banks, those are not going to be initiated by the private sector. They have to be initiated, implemented, and regulated by the public sector. And if, for example, you have a rural development bank or a village rural development bank, the main beneficiaries are women, because they are majority. So you don't actually need a very specialized women bank. You kill two birds with one stone by having a rural development bank, a village development bank, which will look into the other broader issues to ensure that the growth of the economy is inclusive. It benefits the majority. Should I say anything more? No, I think that should be enough for today. But again, when it comes to policy, once you have a policy has to usher into implementation strategy. In Tanzania and many other countries in Africa and the region, they have policies idling there for years. They don't have an implementation strategy. And why do you need an implementation strategy? Implementation strategy ushers into two things: institutional frameworks, oversight institutions, regulatory institutions, and other implementation institutions. But at the same time, it ushers into a legal framework, and then it's come to programs. But having a policy alone is not enough. You have to make sure that it is implemented, it is monitored and evaluated to see how is it performing, to go with the dynamics of the day. And if you say, yeah, I have the policy in place, forget about it, then you go sleeping. No, it has to be monitored and evaluated. And it is advisable always, when it comes to monitoring, take an outsider eye. You know, you may have a house, it is leaking. You don't see it's leaking. Then you put a bucket here to tap the water coming from the ceiling. At the airport, Dar es Salaam, I saw it. But no, you don't see that a problem. But if Victor comes to my house, say, Professor, how come? You see the roof is leaking. You never saw it yourself. You see now? So these are the things which, to ensure that, because the world keeps on changing, the dynamics of the day has to be captured in your policy framework, changing on a daily basis. And again, yeah, we are proud of the mobile phones. But my friend, the mastering, the management of mobile phones is becoming a problem in our countries. The mobiles were meant to increase productivity, but now they are eating into productivity. You see a woman cooking. You see the chips are bad. You see, you are seeing a painter painting with a mobile phone. Eh? You are seeing somebody prune a tree, going with the telephone to prune a tree. It won't work. You see a mechanic trying to screw something, but with the mobile phone, it won't work. It's high time then. Yes, we have the mobile phones, but we should not be the servants of the mobile phone, but masters of the mobile phones. Asanteni sana.
Another round of applause for Professor. The issues and the policy gaps that he has highlighted are immense and they are very pertinent. So in this regard, he has explained the role of the state as a provider and as a regulator, generally to correct market imperfections in the context of financial inclusion. We understand that there are still gaps in this area. So despite the fact that the government can provide financial services, it can regulate to correct market imperfections, but there are still weaknesses here and there. So that's why we need to look at the role, the role of inclusive finance in inclusive growth and realization of the Agenda 2030 for Sustainable Development. Those are SDGs. We understand that financial services can enable us to grow and reduce poverty by availing services, savings, access to credit, insurance, and also intertemporal switching of our incomes. But it's not easy for the market to do all these things. The market is driven by the price mechanisms as we understand. But in the course of doing that, it is possible that there will be distortions. So, well, I would like to welcome Patricia to speak to this. So Patricia Ojangole is the Chief Executive Officer of the Uganda Development Bank Limited. It is the Uganda's only development finance institutions. She holds a Bachelor of Commerce degree award from Makerere University and an MBA from Eastern and Southern Africa Management Institute in Arusha, Tanzania. She's a fellow of the Association of the Chartered Certified Accountants of the United Kingdom. She is a member of the Institute of Certified Public Accountants of Uganda and the Institute of Internal Auditors. She has authored a number of papers in banking and finance, and her current research is on the national development, financial finance institutions, financial sector development, and sustainable finance. Her leadership and professional roles have been recognized globally, including for the last 3 years, as she has been awarded the Sustainability Leader of the Year award at the prestigious annual Karlsruhe Sustainable Finance Awards. The recognition is given to individuals or institutions that demonstrates commitment to creating value for all their stakeholders and protecting the environment. So before Patricia speaks, give him a round of applause to welcome her to speak to us on these issues. Patricia, are you there? So welcome.
That finance opportunity the last 10 or so years. So maybe some thoughts also.
Access. When I thought about it like that, and looking at the role of digital finance and the context in which we're being discussed, I was then thinking, what is the role of digital finance for SMEs, for corporates, for governments, etc., And of course, appreciating that the focus currently is maybe on issues around personal payment, personal, transactions, payments, issues around rural, transformation, masses. So then I'm thinking, what about corporates? What about SMEs? But again, knowing that, of course, there are starting points, and what you note now, the trends are around a lot of SMEs getting online, and so that provides a basis for digital finance or digital finance solutions specifically for SMEs rather than individuals, as currently is the case. But I think coming back to inclusion, the way that we maybe understand it, and maybe just reemphasize that it's extremely important because when we talk about inclusion, we think about those that are excluded. And in our context, we look at women, youth, rural populations, SMEs, and the reason we say they are not included is because do not have the usual requirement to be able to walk to a formal financial institution or traditional institutions to be able to access finance. And therefore, that actually lends an opportunity for digital finance. And looking at digital finance and specifically what role has been done and undertaken, and maybe how this can be taken forward. I know you didn't talk about the role of the private sector, the role of the public sector. I want to present myself as a kind of link between public sector and private sector, because I understand public sector government policy, but which then I implement or should be implementing through the private sector. And so that is the kind of role that we are playing. But talk about financial inclusion and issues around leaving no one behind, and how we bring everyone on board and everyone playing different roles, and specifically coming from a public institution, how would we be able to recognize the issues that are being discussed and then be able to play the role that we are supposed to be playing. So when talking about issues around inclusion, we have also been talking about financial literacy, but the realization is it should probably be just beyond financial literacy. In my own context, sitting here and looking at who is providing financing, who needs financing, what prevents capital or money to flow from those that have. What we recognized here was issues around what I prefer to call the demand side issues around access. Yeah. So I mean, when you're giving money to someone in the rural areas, what for? If it's someone who maybe undertake an agricultural intervention, what are they going to produce? Where are they going to sell? All these kind of issues. And so you have to look at that entire complete value chain before you even provide capital. Otherwise, the person providing capital probably see that the money is going to waste. So beyond financial inclusion, it's important to address a host of demand side issues around why also people do not get financing, and there are whole lots of those issues. So I think to complete the chain, we have to look at both ends. So when solutions are being offered, what more can be done over and above intervention, and consider other non-financial interventions to be able to make sure that the populations that need to get funding do get funding. Of course, it's not possible to do this alone. I don't think that I've not heard that I think would be very, very relevant around this is the issue around partnerships. If you look at the traditional banks or even ourselves as a development bank, there are things we understand that we can, we have, but then there is things that we do not have. So what would be very useful, and one of the things that we have done has been partnerships, like partnering with a fintech. And what we did was to specifically recognize the fact that, yes, we need to support rural development, in terms of access to finance. But how do we do it? Because we are, a bank that we are, we recognize that our rural population, the women, the youth, we will not be able to come to our bank and then we give them money, individually. So what we did was to work with a fintech, basically explain what we wanted to do, and they developed a solution, we call it AgroConnect, that is currently helping provide financing to these masses. And beyond just financing, they are able to mobilize savings. There's insurances embedded in there. There are guarantees, a mechanism around, a guarantee that, will give us comfort, in terms of lending. And we've been able to support our rural population through this. We would not have been able to do it. But talking about, the role of digital finance, this is a case that we can talk about. And when you look at the rural population, talk about inclusion, we've been able to support out of the total number of over 3,000 currently, and we just keep on rolling over the facility. Over 3,000, 74% are women, and again, a number of them are youth. And now, when we do this, these people will not have been able to come and access financing, but we are helping the cause of inclusion by partnering and being able to do this kind of transactions. So maybe I can stop here for now. Thank you.
A round of applause to Patricia. So in her preamble on the role of inclusive finance in the realization of the SDGs is that UDBL, that is Uganda Development Bank Limited, has partnered with the fintechs to channel credit to where it really matters. And we understand that the population in the rural areas is the vast majority, and that is where the interventions will be more meaningful. But these interventions takes the form of a portfolio of financial services. For us on this other end, we understand that it's not about credit, first of all, and that is what she said. It is about other financial services. Besides that, there has to be support of an integrated solution, access to markets, infrastructure, and all the challenges that these people face so that they can meaningfully contribute towards the realization of the SDG. So, well, it is also important to examine the role of inclusive finance in the in achieving the UN Sustainable Development Goals in the context of EAC. So that's where we have been. So whereas she has said, she has provided the context of a portfolio of financial services that are that tries to correct the market failure through the Uganda Development Bank Limited, incorporating other financial service providers, for example, insurance, savings, and access to the market. But still, the missing link in this provision of financial services is that it's not about finance. We all recognize that. There could be infrastructural challenges. There could be literacy issues. So when coupled with it, they provide an integrated solution to issues that face. So on the issue of the role of financial inclusion in achieving the UN Sustainable Development Goals, we welcome Professor Peter Muriu. So Professor Peter Muriu, as long as I've known him, we have worked together, both at the university and marking dissertations, I know, in this area. But let me read his bio, and it's very interesting. And we realize that we share a common destiny and work with Professor Murinde here. Yeah, he has a PhD from the University of Birmingham. While he faced north, I faced south. So he is an associate professor at the Department of Economics, Development Studies, University of Nairobi, and alumnus of ERC. CMAP, that is Collaborative Master's Program, Scholarship Award for African Scholars. He's also an active member of the ERC network and external reviewer for Group C, Finance and Resource Mobilization, Thematic Research. For over 20 years, he has spearheaded various research projects whose aim is to ignite new policies on financial inclusion, financial stability, climate finance, banking concentration, microfinance initiatives, cross-border banking, provisioning behavior, and risk management in the banking industry. Development banks as instrument of economic growth and recent developments in capital markets. As a policy analyst, he has been engaged by several African governments on matters of financial inclusion, banking, and institutional reforms. So, Professor Muriu, welcome and speak to us on these issues of inclusive finance and yes, welcome.
Can I use this? It's that.
Yeah, it's there.
Okay. Thank you. Thank you very much, Peter. When Peter was being called in the morning, most of the times I almost rose up to answer questions related to him. I wish to recognize the presence of Kaka, Honorable Makame, because he's the one who initiated me into Birmingham. You know the way you join Form 1 in high school and you are monolized by the big boys? I had the advantage when I found him. So I would say that Victor has 2 sons in this room. And in East Africa, he has several grandsons and granddaughters. Patricia, who has just talked earlier, we recently published a book chapter on Kenya Development Corporation, which is a development bank, and she could always borrow from us. My PhD, just like Kaka, Honorable there, was also on financial inclusion, and I've also done an ARC project on financial inclusion, which is ARC publication number 384. I was requested to talk today about the role of financial inclusion on achieving the SDGs. As you know, there are 17 SDGs. And they are normally classified into 3 themes: the 1 to 6, the 7 to 12, 13 to 17. Not all of them will be relevant to what we are discussing today. And therefore, I picked the ones that I thought are relevant. The SDG 1, that is end poverty. When you deal with end poverty, you also tackle number 2, which is hunger. Has to do with food security. I also picked number 5, gender equality. And then I picked number 8, economic growth, and number 10, inequality. But then the first thing I asked myself is, where are we in terms of these SDGs? And I looked at the assessment report for 2024. If you go to the UN SDGs, you'll find that assessment report there, which says, for the first one, which is end poverty, we are at marginal, 100% marginal, which means it's like we are doing nothing. For the hunger, that is food security, 65% we have stagnated, 65%. Gender equality, 17% stagnation. Economic growth, 50% stagnation. Inequality, 45% stagnation. That's why we are on these SDGs that are related to financial inclusion. Then I asked myself, fine, we are talking of financial inclusion. Which aspect are we exactly talking about? Because there is access, there is usage, and there is the quality of services. And the financial services that are tailored to the client. Now, if you look at the SDGs that I have mentioned, they revolve around poverty, inclusive growth and inequality. And I'll give specific examples because I want to focus on digital transformation for today, not the broader financial inclusion as we know it, because that is what will be related to the papers that were presented today. There was one that Anne, my good friend Anne, on gender. I listened to the presentation from Sudan, and I asked myself a question. 86% men, about 14% women. You know the aspect. No? Yes. And that troubled me so much, and I asked myself one question. We know, and it is documented in the literature, basic reasons as to why women cannot access finance services. For instance, it is known that much of it has to do with income. If you look at labor force participation in your own country, labor force participation, if you do labor force participation survey, you'll find that the highest percentage, it is men. Yeah? If you look at education, access to education, most you'll still find that it is men. But then, you know, what we call outlier, the Sudan, does it have to do with cultural aspects? That's a question that I've been asking myself. And fine, we have a women-only bank in Kenya, Kenya Women Finance Trust. But you know, let me give a little example. The other day, my brother who runs transport, he's in transport business, and the wife banks with Kenya Women Finance Bank, and told the wife, I need money to acquire another vehicle. Why don't you go to that women bank and bring me the money? So who accesses the money and who pays? You know, there is that question. Who goes for the money and who pays? The interim or the transitional president of Bangladesh, Yunus, started Grameen Bank. If you read a lot about the microfinance activities in that country, is that Grameen Bank women would borrow, but they would not have any say on how the money used at all. Now, digital transformation. Let me give you some examples here. There is the case of 1 acre fund. You can read about it later. You can just Google about the 1 acre fund. You'll get it. It gives smallholder-owned products to the poor farmers in Western for the farm inputs, credit on inputs. And then you pay slowly small amounts, until you have finished your final installment. This was not possible before the digital transformations in Kenya, because they get the money in their phones and they pay slowly. So this digital transformation has enabled this to happen to the poor farmers in Western Kenya. Micro investments. In Kenya, there is the M-Akiba bond, and floated of 5 billion, which is tax-free. The coupon rate is 10%. With 3,000, you can invest in a M-Akiba bond. That is only possible through the digital transformation. The M-Copper solar program is in Kenya, Uganda, Ghana, Nigeria, and South Africa, 5 countries. So what happens is that the low-income people are able to acquire high-quality, affordable green energy, solar products. This started in the year 2010. Over 500 households have benefited, employing more than 1,000 staff, full-time staff in East Africa, and 1,000 full-time staff in Kenya, over 1,500 agents and sales agents in East Africa. That has only been possible through the digital transformation, because you get the solar systems and then you'll be paying little by little using the phone until you are done with your final installment. Now look at the water vending machines in the slums, Mathare slums of Nairobi. This is a private, is a PPP, public-private partnership between the county government of Nairobi, the Safaricom, you know, the telecom, and the Grand Force, which is a Danish engineering firm. Previously, what has been happening in the slums is that the poor people would line up to buy water from tanks, the lorries, which they are not even certain that the water is clean. But then with this project, which has spread all over the slums, is that you get a smart card, load into points, and then anytime you go to the water vending machine, you just swipe. You just swipe. And the whole information is cloud-based system. And you buy 20 liters at only 50 shillings. Of course, for the Kenyan example, we know the e-service delivery, that the poor person anywhere in the rural area can access these services using the digital platform, and the bureaucracy is reduced instead of traveling all the way to offices even to acquire a birth certificate. Now, the employment scenario is with the digital financial services, so many agents have come over. You have the spillover effects, even at the macro level. And therefore, there are a lot of opportunities for the disadvantaged in terms of savings, borrowings, payments, and insurance. So, if you look at those examples, it shows you that we just need to put the correct policies on fintech, and as matter as regulation is concerned, ensure that the consumers or the users of the digital financial services are protected from fraud, but without over-regulating. Without over-regulating. You know very well, those who know how M-Pesa started, it was on autopilot, left without left on its own. The regulations came later. Regulations basically followed the innovations. Thank you, Peter. I think I've not taken more than your time, the 10 minutes.
But it's what it's so.
Oh, thank you.
So, thank you so much. You know, I could have intervened, but what you are speaking about on the SDGs and digital finance is very important because it underscores the very last element of financial inclusion, which in the East Africa frontier economies must focus on, and that is the impact of financial services. The financial services have to be relevant to address the pertinent needs of the people so that we can achieve the SDGs. On my side, I'm happy because he has mentioned that they're about half of the SDGs. But I'm not proud because you have excluded other SDGs which finance plays a critical role. For instance, the SDGs on healthcare, the SDG that are indirectly facilitated by access to digital financial services, even education. Remember, Tavnit and Suri, in their paper, they say that because of the access to M-Pesa, the educational outcomes of people who have consistently been using M-Pesa is slightly higher than those who haven't. So it contributes to better health, to better educational outcomes and healthcare. So it is deeper than what Professor, my friend, has said. So, but I think he will come back to clarify that. So the other thing is that the efficacy of financial services in addressing and enabling us to achieve the SDGs and even the nationally agreed goals depends on the relevance of these financial services and the externalities that arise in the course of utilizing it. So it comes to the issues of market conduct. So on our side, as regulators, we are confronted with very good financial services, especially in the era of digital financial services. They are there. They come. And there is always a complaint that regulators do not process as fast as possible licensing of these digital financial services. On the side of the Central Bank of Kenya, I happened to receive complaints about 100 of them. They said they have not been licensed and it's in the pipeline for 6 months. It's not about just licensing them, but what value do they have on the consumers of financial services? So, Komba will have to answer these questions. It's not for me. So Komba is currently the Director Financial Deepening and Inclusion at the Bank of Tanzania. He has a robust of skill set that includes banking, business analysis, risk management, SDLC, database, among others. He was previously Director Strategy and Financial Inclusion at the Alliance for Financial Inclusion, AFI, and Advisor National Payment Systems at the Bank of Tanzania. So give a round of applause as Komba comes to speak to us on the pertinent questions. Welcome. Oh, yeah. You have 10 minutes, yeah?
Okay.
Right.
Thank you. Thank you very much, Director of the event. Thank you also for I'm humbled by the introduction. On behalf of the Bank of Tanzania, I want to acknowledge the opportunity that you have given us to come and speak to this August forum. And as I've been told to speak with 10 minutes, and I'll spare the 10 minutes. I'll use the 10 minutes. And the topic is quite wide and broad, but I'll focus myself on DFS. As we've been told, and I believe from all the discussion that we have, every one of us has interacted with a digital financial services, correct? We all have our gadgets with us. Who doesn't have a smartphone in this room? So potentially you are all, not potentially, you are actually active consumers of these services. And picture this way, you're active consumers who I'll just label you as sophisticated consumers to this extent of this room. Now look at East Africa and the region of Africa where you have millions of people who are not as sophisticated as you in this room. And within these millions of people who are not sophisticated as you and me in this room in terms of using this access, we also do face new products that are making us naive in terms of interacting with digital financial services. The second picture that I want you to put in your mind is the smartphone penetration in this continent is not as high. In East Africa, in Tanzania, internet and the like. However, we know with digital financial services, new type of risks are coming in, which I'll just mention in terms of how we're addressing them and market conduct, but also new players are also coming in to the market. So many new players, meaning to say in traditional banking, and my colleague will attest, in traditional banking, you're just aware of microfinance, banks, financial institutions. But with digital financial services ecosystem that is happening right now, you have fintechs who are coming into play. You could have anyone, anywhere in the world, offering a digital product to you, seated where you are right now. And this is happening. And the last point that I want you to put in this context, from our side, we also have multiple regulators. Because it's digital, it's a phone, you'd have a communication authority, you'll have a Ministry of Communication, you'll have the Ministry of Finance, you'll also have the central bank. So what we do, starting with the last one, we really have to now look at ecosystem thinking, connected thinking, and collaborative approach in order to address these market conduct approaches that we are currently going to mention. So consumer protection, not to overemphasize, we all know it's one of the key enablers for financial access and usage of financial services, because it does one simple thing. It gives you trust. And you all know the history of money. Without trust, there's nothing. If you don't know me, can you lend me your 10 million if I ask you, excuse me, Professor, since you go to China most of the time, you have a lot of money. Can I borrow? Will you agree to give me 10 million? You see? He doesn't trust me. So trust is very important. So without market conduct to ensure that trust, it's quite impossible. 4 risks that we have identified in our market conduct in terms of DFS. Risk number 1, fraud. Risk number 2, data misuse. There's significant data misuse. Risk number 3, it's transparency. By the way, they're not in the order of chronology, but whatever. Transparency. And the 4th one, which I'll really look at it, is more to do with the risk of responsible lending, particularly on the product that you have it. Or you could also add another one in terms of, do we have enough or adequate redress mechanisms by the supply side? Because if I offer you a service, as a customer, I'm a king. I'm required to be given appropriate response by the service provider. But those 5 risks that I've mentioned are the ones that we really focus. And how do we do from the central bank? As I've said, from the approach, we look at the ecosystem analysis, connected thinking, and collaboration with other players. But we also use a risk-based approach because the market is quite dynamic. There are so many other players that we have currently. We already have a spate of digital lenders. Initially, we thought the players who are going to offer these digital lenders are the ones that we regulate, like digital financial service providers and banks. But now we have apps based that are offering this lending, and most are not registered. So what do? We have to collaborate with different stakeholders in the entire ecosystem, including the law enforcement, to zoom into these providers, including engaging Google, for instance, to lock in some of this app so that they don't continue impacting on one of the risks that I've mentioned, data privacy and slippage of people's information going into the database of your phone and then sending all these messages that are quite abusive in terms of their aggressiveness in data collection. And just to end now, in terms of one thing that we also did realize is the fact that the risks that are now continually expanding in the region, Tanzania, Kenya, Uganda, and the like, out of the 4, 2 are really prominent: fraud and transparency, right? And this is actually not regional, it's actually global. And the reason, it's all related on cybersecurity, because increasingly, as we're talking about this topic of DFS, things are being operated in DFS. Remember, I started asking you to think on the sophisticated and naivety of consumers. Now imagine of social engineering that's happening in a speed of light, if I may use the term, in terms of how individuals out there are easily being defrauded of their own information and the like. I will want to end with some research tips, since we are here in a research consortium that we're still grappling, and I think not only in Tanzania, but across many regions in emerging economies. But before I go there, I just want you to picture that the dynamism in the technology world and DFS is not ending. It has not ended, it's actually beginning. We are now talking about data empowerment of consumers. With the issuance of data protection laws across the world, if you look from PSD2 in Europe, and the European Union, when they started allowing individuals to have power to their data, currently what's really happening now, from the top-down services that we used to offer, now it's a bottom demand side of services. What do I mean by that? It means you and me can now tell my bank and say, hey, wait a minute, the data that sits with you, I can allow it to be used by a third-party provider, a new player. And let that third-party provider offer me the services that I have. We are going into services, the world has already moved in, banking as a service, right? Now that introduces a couple of other market conduct issues, a couple of risks, but the risks are still the same. Fraud, and data that can be misused. So we are going to open banking, open finance that we're currently seeing, and regulators are already moving into that space, and they're working on that. We cannot discuss more. Research tips. Number one, we are struggling in terms of how do you do a regulatory impact assessment clearly to articulate why are we doing this financial inclusion. We have regulations, as you've said, like in Kenya, they did a test and learn approach. We also did it. But how best can we have your brains from a research consortiums in that particular area that I've said? Parallel to that is impact assessments, the impact assessment around financial inclusion and things that would create meaning to why we're doing this. Data mobility and impact of data mobility in financial inclusion is quite heavy and important for research. And lastly, behavior economics. We all know that the world is moving to behaviors. I mean, I think there's no more time than economics and psychologies to link together than now, with all this AI, machine learning, and all these algorithms. Oh, by the way, the other risk that I forgot to mention is algorithm bias. But anyway, so with these 4 research points that I've just mentioned, I think I should end, and my 10 minutes are done. Thank you so much.
Please, another round of applause, because what we've talked about is on innovative ideas and progressive partnership to promote financial inclusion. We all acknowledge the fact that we all leverage on technology to provide new financial services, especially in the digital space. That is where we are going, plus the risks that are in there. So the emerging issues and the research questions that we have are within our domain, and they have been answered in some of the papers that we have done in this forum and in the previous one under this project. So the impact of regulation on financial inclusion is uncharted area and an area of interest to everyone. It is both the regulations that concern with the data and the regulations within the financial sector and privacy laws, plus AML CFT issues. They have an impact on the on access and usage of financial services, as well as the impact. So please, Kennedy, park that question. Will come back to you. And also, I want to pose another round of questions, and it's both Patricia, Prof, and Professor Moshe and Professor Muriu. And this is, what are the pathways to government in ensuring that all the citizens access digital financial services that have a holistic impact on their lives? It's not only about income. We want to see the use of digital financial services that enables our society to achieve the SDGs, and that is sustainable. So this is on the demand side, on the users of financial services. But on the supply side, how do we ensure sustainability in the provision of financial services in this area? This is an open question that I would allow you to make 2 minutes remarks on it, and then we also invite you, the experts, to also make your contributions and comments. So we start with you. Oh, yeah, thanks.
Thank you very much. When it comes to leadership in Africa, whenever I have a chance to talk to the leaders, I tell them they should have 3 attributes on whatever they are doing. 1, to be visionary. To be visionary. Secondly, they be selfless, not selfish. Most of our political leaders, they think more about their stomachs, of their family, friends, and those who are connected with. You realize even in some cases, Uganda being one of them. Who is the governor of the Bank of Uganda? And what the daughter of Museveni is not there. Okay. What I wanted to say, that's we have to do away with selfishness. Meaning then, if you are a leader, you are a saver of the people. It's just like inviting some guests to your home. The first thing you ask, have my guests got what they wanted? Have you given them water? Have you given them food? But the other way around will say, yeah, I want to feed my stomach first. When I feel that I'm satisfied, then anybody else should eat. That's exactly, it doesn't go that way. The third attribute, walking the talk. If we can embrace these three attributes, then we'll be seeing Africa changing. We'll be seeing our economic growth being inclusive. We'll be seeing our people in terms of the gap between rural and urban reducing. Yeah, 2 weeks ago, I drove. Usually I drive alone. But sometimes they say, yeah, you are with your age driving alone. I say, yes, I drive alone, but I'm not alone, I'm with God. And when I look at the rural areas, comparing the 20 years, I don't see much difference. And even in some cases, we've gone backward. There was a time when Tanzania, we had plenty of food in terms of maize and wheat. We are producing wheat, we are producing maize. Nowadays, because of globalization, we are importing 75% of our wheat from Ukraine. 25% of our edible oil from Russia. But what is happening in Russia and Ukraine? They've distorted the supply chain. Nowadays, you are looking for chapati or mandazi. Yeah? A chapati, you know the chapatis and mandazis. Yeah? It used to cost, let's say, 50 shillings. Now, 100 shillings. The cost of living has gone up. Why? Because now, because of globalization, we've relaxed, but there are areas where we have to be self-reliant. And one of the areas is food security. God bless Africa. God bless Tanzania.
So, in 2 minutes, please. I go online. Is Patricia there?
Yes, I'm here.
Okay.
So very quickly, I think for me, what probably needs to be done is, I think you appreciate the challenges. So being deliberate around providing solutions to those challenges, everyone doing what they're supposed to do. We know the role of data in some of our jurisdictions. Data is still expensive and affordable. What can be done to make it affordable and accessible? And then, of course, building the information infrastructure that is required to accelerate digital transformation. That's another area that the government can look at. And then innovation support. Innovation presents a new economic sector, especially for the young people. They're the ones who are innovating. They're the ones who are, turning around or turning out for the innovative solutions that we need to deploy to different sectors as well. So what kind of interventions can the government put in place to promote and allow innovation to rise? And then, of course, financial inclusion. I think that's very, very important. All the players, all the actors across the value chain to know. Funds as well, cost of a smartphone for our rural population. I think they still find it expensive. For the intervention that I talked about, we actually provide the rural VSLs that we support with a smartphone, of course, they will kind of work it around but you have to make the phones, the hard infrastructure available to kind of enable this. And then, of course, having mechanisms to provide finance to all the actors, whether the innovative from the supply side, the private sector, and everybody that is involved. So I think that's what I can say. Thank you.
Thank you so much. So I welcome. So, Prof, 2 minutes.
Thank you, Peter. You have asked about constraints to access. You know, when you're talking of financial inclusion, you have demand-side constraints and you have supply-side constraints. One, in terms of access to digital financial services, there should be a policy of lowering the costs because the costs are quite high. If you ask anybody who is in this room from Uganda to pull the money from the bank to the phone, it is quite prohibitive. We may not feel it, those who are in this room, when you are charged 100 shillings to get money from the bank, because it is 100 out of which fraction of your money in the bank? That's a question. But that to the poor people is a big issue. During COVID, in Kenya, all those costs were removed. And I can tell you the volume of digital transactions in Kenya went too high. And banks can actually capitalize on the volumes. Just lower the cost and capitalize on the volumes. Then the other thing is that governments need to invest on sex disaggregated data so that you can observe the behavior and tell which products would be tailor-made towards women. The other thing is that in the rural areas, you have limited agents where women, you know, there's a distance that a man can cover to go and do digital transactions, put money in the, load money in the phone, and those some distances which women cannot cover. The other thing is that, you know, Uber, the Uber Bolt thing, women are happy to request for Uber that are female driven. You see? Some research in DRC Congo shows that women are happy dealing with the female agents. Yeah? What about boosting the uptake of agents which are normally managed and operated by women?
So, that's a critical question, but well, Kennedy, would you make comments on that? Yes.
Thank you. The beauty and the challenge of coming the last is trying to think differently. But I'll add 2 more points. One, sorry about that. Of access, I think access to finance and access to digital financial services in general, one key important aspect is enabling collateral to the underbanked, underprivileged, and the poor. Most of this, when it comes to financial inclusion, the key number 1 factor is bankable society. So at least they have an economic activity. They are having some assets. So currently, a secure transaction kind of loan, collateral registry to allow for expansion of the old law of chattels, ordinance of 18-something in the region from the British economy. We need to move now and allow for an effective collateral registry for immovable assets. Already, the governments are moving forward to ensure that we have warehouse receipting. Can this be used, invoice financing, and other innovation around unlocking the potential of the underbanked through these other alternative collateral registries? The second thing on that, use of data to also unlock collateral for individuals, algorithms around how individuals can be accessed. We're already seeing that. I will not go further on that. The third one, and I mean the last point that I would want to add on this, is opening up data. Can your data and my data become mobile? Can we now talk about data interoperability in East Africa and in the continent? Data sits in silos. You are not visible. The mamamboga who always transact every day, picking up things from ferry, moving outside, year in, year end, she's trapped in a vicious cycle. But her data sits with a mobile network operator. Her data is not shared with the bank, which if it was shared, should move from a 50,000 loan to a 100,000 loan to a 200,000 loan and probably own a rickshaw. Thank you.
Thank you so much. You see, your remarks resonate well with the benefits that we could get from the data and sharing the data secondarily. But we have data protection laws, which is a big thing. So I don't know where we're heading to. But you know, consent and meeting the conditions are very important. So in those remarks, I open up the floor on for the audience to provide their comments on this. So we have the Cranwell, David. So yes, two.
Here, so I can be heard across there, okay? I have a question for Professor Moshi. And then to respect some of the things that Kennedy was talking about. I have a terrible passion, and that's a passion for policy. And this is not something which sits very easily, because you can see things which you want to change and that need to change. And I see AARC, and I see its researchers, and I see researchers who are very good at research. But as policy, they need to go to become policy champions. And there's a transition that needs to be made. And I see you sitting there, and you say things which need to be said, but which sometimes are painful to say. But still, you say those things. So I don't know whether you've got some wisdom that you can provide to people now who have found out policy issues that need to change, and how you can inspire them to become part of that process of change, not just the observer of that change. So how do they go to the next level? And I think, Kennedy, you raised a lot of very, very significant and important issues for the future, which are largely around the dataverse. How do we use this data? How do we port this data? Who owns our data? Which is one of my bigger issues. And so I think there are, and you also talked about behavioral economics. I don't have anything specific to say, but these are absolutely fundamental issues in digital finance, in the digital verse, moving forward. So I think that those issues that were raised in PSD2, but now we're moving into an open banking era, but we don't have those structures in East Africa. Who do I give permission to for my data when other people know me better than I do from a digital perspective? And we've got AI, we've got machine learning. How am I going to basically control access to me? I'm the owner of me, and yet from a digital perspective, it's everybody, it's Google who owns me. Yeah? So I think you raised some serious issues. I'm not quite sure how we're going to move forward. And I've spoken to to people like Professor Bitange and Demo on some of these data issues, and we're scratching the surface of where we need to be.
Thank you, David, for raising those comments. So I think we raise the comments, then we'll allow the speakers to speak. So next, then you'll be the third one.
Thank you. Good evening to everyone. Well, my name is Dennis Mwigusa. I'm coming from Stipro. So yeah, I have a comment from Professor Mushi when you are discussing about the policy, that once we have formulated the policies, then there is a need to make sure that we make follow-ups on implementation, but also making sure that these policies are being monitored and evaluated. But my concern is, before we even go into those stages, that do we really understand the processes for formulating these kind of policies? Because I'm saying this of the experience that I have. I've been involved in formulating some of the policies, even at the national level, that you find that even the one who is initiating that process of formulating the policy doesn't have the knowledge of the policy that is actually going to be formulated. So what do we need to do? First, to make sure that we educate these legislators, policymakers, to have the proper education and have a clear understanding of how these policies needs to be formulated. They should understand all those processes, be it how to engage the stakeholders, because there are some of the policies that was actually involved that you find you have on the government agencies or ministries, and there is no any other stakeholders from the private industry who are the main users of these kind of policies. So I think we need to go more far in making sure that we provide education so that they have a very good understanding. Even those who are at the parliament, they have a very good understanding, not talking of these policies while you know nothing about the policy itself. Yeah, the other thing, anyway, this is just to declare self-interest. You talked about the establishment of the Chinese forum. I've been to China for 4 good years. I did my postgraduate there. So I think then we'll have to discuss after the meeting and see if I can get to have more visits in China.
Thank you so much.
The other thing, maybe this was discussed earlier, but I thought I should say it before we move out of here. It was about, someone talked about the fintech associations in Kenya, that there are 4 fintech associations. But I must declare that one of the pioneers of registering these fintech associations in Tanzania. And Mr. Komba, I think you really understand the challenges that we faced between the 2 fintech associations that we have. You find that there is a fintech association which is actually charging less amount, $200 for someone to become a member. So think of a startup which has just started. It has no capital at all, but it needs to be heard to the policymakers, to the legislators, and you are telling that kind of a startup to pay $200 for it to become a member. Are we really going to achieve what we are aiming for? So these are some of the issues that I thought I should talk about. But I must say also, Mr. Komba, I've done a very big research in terms of mobile lending. If you want any advice in that aspect, including these bunch of mobile apps which are lending money, I have a very good experience on that. I've even tried to lend some money from those apps and received a lot of abusive languages, petition and everything. So I know all those technicalities, and I can give you a list of 20 plus mobile apps which are even their offices. I've done that kind of a research. And I remember last time I met with one of our staff from Central Bank, Mr. Shafiq, and he was actually very interested to get some detail from me. But I told him, no, we need to sit down and see how we can do it in a proper way. It's not about a matter of giving you those kind of information, but we can do a research on this and see the best way we can go about it. Because I've seen in some of the countries, like in India, people have killed themselves because of going into these mobile apps and lending money without having that proper knowledge. Because we're being told that maybe you'll be charged only 80% in a month, but once you take that money, then you'll be charged 40% in a week. And that is really happening, and they are still there, plenty of them still doing that kind of a business, despite all the initiatives that you have made to make sure that you put those adverts in the newspapers and whatsoever. Thank you.
Thank you so much. So keep it short, please. Take a minute to make your comment or an answer or contribute to the debate. So please, can you go ahead? Yes. So you'll be next. Sorry.
Yeah, thank you very much for your eloquent presentations. I've captured a lot of points from the presentations of my learned or land college. When we talk about financial inclusion, it's really a very interesting topic which entails a very extensive discussion. Countries like Kenya, Uganda, and I think it could be Tanzania where we are in, you have gone very ahead, you have gone far ahead by adopting policies and regulations. You have them there. But what I've heard from you, you are still saying that there is problems with these policies and regulations. What's the problem here? If you have the policies and laws that protects the rights of others, those, especially the consumers, of course we are talking about people who are included in this financial in financial inclusion, women, rural people from the rural areas, and even I myself, I'm one of them, isn't it? Yes. I'm part of that process of inclusion. Professor made an illustration, very interesting. He talked about maybe two kinds of people or three. A woman holding a phone, talking on a phone, and frying her chips.
Chips?
Yeah, chips. Suddenly these chips get burnt. And then also talked about somebody holding a phone while painting the wall. Yeah. And I don't know whether this phone is the one is it part of the financial inclusion strategy or not? Because I have got a phone here. I got it. A very good smartphone. But maybe I can say, somebody can say, even myself, how do you know that it's my phone? This is the question. Now, doctor, I don't remember his name, it's Kennedy Komba. Dr. Kennedy. Dr. Kennedy talked about smartphone penetration and also the fintech. What we know about the fintech is a computer software which supports banking services and so on. And there are people who have got their accounts, of course, who have opened accounts in banks, various banks. What happens if somebody breaks into their accounts and defrauds all what he has? And also, somebody talked about the need for adoption of policies and regulations. And as I said, these regulations are there. But what I have discovered is that they have not expanded these regulations in order to cover those people who are financially excluded. Those who are financially excluded. And I know those ones who are financially included could be deriving the benefits of that inclusion. They're getting it. But again, they have problems of accessing loans because they need to be supported. I've never heard somebody talking about the strategies that they have in place in order to support this kind of groups, because financial inclusion is not about opening a bank account and all this blah blah blah, but also those who are financially included need also the support. Even vulnerable women, the women especially who are running business, even in South Sudan, women play a very important part in the economic sector. They are the ones supporting families, and no one is supporting them. Even the government, the banks are not giving them loans. They have no access to loans. Okay. We have here very good people. I think you have the knowledge, yeah? And also the means of supporting such kind of people. And could be in future we may need also your support in this area.
Thank you.
Thank you very much.
Well, thank you so much for the comments. But yeah, you see.
Yeah, I will be very short. My name is Jean-Claude Nyamwel from Burundi. I really appreciate the points for policy orientation that have been raised by panelists, but I want to insist on the point that has been raised by Professor Moshe. I like where he started, raising a question about which development paradigm is leading our discussion here on financial inclusion. I was asking myself, we have learned a lot of theories, but in this case of complex situation, there is no single solution that one can use. And I was asking myself whether there is a theory that summarizes all the theories. So you will find that after all, it is a matter of having many eyes and looking at both sides, being critical thinking in the way we are doing. And coming to the point where you ended again, about the leadership in most of the African countries, my observation is that it is a moral issue. It is a moral issue, and I don't know how this kind of science and the political talk can now engage with the morality. I like the way they say in Swahili, they say utu. I don't know if you, humanness, integrity. It is all what is missing in our leadership. Utu, humanness. Because if you are human and you are part of the society and you are empathic with your counterparts, so you will be willing to change and you will be willing to see good things. And in that context, whenever there is a debate, whenever there is a willing to find a solution, and the solutions are finding a good ground and to be looked at, I think solutions will always come. Yes, we have a Chinese example, but if you go to Western countries, that is a non-debate, for instance, and still it's science. So my point of argument is, it is all about a moral issue. It is always about a willingness to engage with the positive changes, and those solutions will come ahead. That is what I want to raise. Thanks. And yeah, moral. It is a moral issue in what you are talking here, and whenever there is a willingness, we should always come up with solutions. Thank you.
Thank you so much. So in the interest of time, since it is not a question, so each one of us, the panelists here, you can make closing remarks in 1 minute. I know Professor, Professor Mriu, I will start with you.
Thank you very much. Let me say it is actually an honor to have had me as a panelist and to listen to the output that came from this research workshop. One important point that I would wish to close with is that we have a serious problem on financial literacy. In the rural areas, how many people can afford smartphones? Fine, I can buy my mother, a smartphone. But will she be able to operate the application the digital application in the phone. Okay. Those others in the rural areas that can't afford the smartphone will have this other phone. Can they be able to operate the star, we call it USSD code? USSD code, that's, you put star and like you want to get money from the bank. We call it USSD code. How many can be able to do that? You see, so we have a serious problem. Then the other issue is how many people can afford to have like the women. How many can afford to have the phone so that they can do digital financial services? Because you cannot be financially included in the digital space if in the first instance you cannot afford a phone. Thank you, Chair.
So I take it back to you, Prof. Then finally.
Yeah, Moro. I think we say leaders should stop wearing sunglasses when looking at issues. I'm using this one because there was a time Mwalimu Nyerere met the president of Banda of Malawi. And Nyerere asked him, we told you not to have any relations with South Africa. Then he told Mwalimu, no, you are saying there are white people in South Africa, I never saw one. Mwalimu said, tell me, is that true? Is that true, Banda? Is that true? Then he said, I was wearing my sunglasses, so everybody was black. That is Mwalimu himself told me 6 months before he passed away, on 29th March 1999. I'll never forget that. Okay. Formulating policies, the ignorance is formulating policies. I'm an expert in policy analysis and formulation. Invite me to your countries, then I would be able to do a 5-day course on that. I've been to that in South Africa, Malawi, Zambia, name them. So invite me, I'll get away with that ignorance. Okay. Yeah, we are a policy-oriented institution. How come then we are not seeing that policy aspect coming out? Do 3 things. 1, encourage joint research between academics and those on the ground. 2, avoid too much of the academics, econometrics, and do away with that. And lastly, in a meeting like that, make sure that there is adequate participation of the policymakers. Then you are done. Asante.
Thank you so much. Clap for him. But anyway, so I think then we speak to go to Patricia. So,
okay. I think there are a few questions. What am I supposed to just close or respond to some of the questions?
Respond to them.
Okay. Quick questions. So there were questions relating to digital lending in Tanzania. First of all, I acknowledge the points raised by Daniel. Yeah, so we take note of that. Really, we need to improve our financial service sector. On fintech regulatory aspects, certainly the Bank of Tanzania is working towards to ensure that market is robust, and we will continue to engage. On digital financial services, we also do our own research. We are aware of a couple of the players in the market, but we are open to also collaborate with the industry, with the research houses, to further expand and enhance our financial sector. So we would expect, as what Professor has said, the collaboration between the practitioners and the policymaker to have applied research, because we need to get this research on the ground. On the issues relating to what happens if your money is stolen in your bank and fintech, banks have for many years have liability frameworks. So currently, even in digital financial services, there are 2 points where the entry of engagement will happen. Either online, very remotely, you do your online banking, that's very remote, or face-to-face when you go to an ATM machine, point of sale, or using your phone. So, but at all those 2 points, there are certain elements that can happen where your account can be defrauded. So 2 areas, again, they look at. Number 1, zero liability for consumer if that unauthorized transaction was made not by the doing of the consumer, neither by any other engagement that the consumer might have divulged their PIN. So that consumer will be given zero liability. There are rules around that. If it's a card that you've used, there will be circumstances to which a consumer will be compensated. However, the last point which I'll end with is limited liability to consumer where it's proved the consumer did not, for instance, when you received a push notification that there was an authorized transaction, pass a limited time. So each country have limited time. Other countries have 3 days, 4 days as max. You don't report back to your bank that your account was debited. And in the event where you lose your PIN, you became careless, somebody took it, then again, you'll be also limited to the extent of liability. I think I've covered all this question. Thank you so much.
You have covered. I go back to online in 1 minute. I don't know whether Patricia is there to make comment, if any, regarding the issues. Yes, please.
Yeah, just in 1 minute, maybe I'll start with the issue of policy is extremely important, but I think policies need to be localized. And I'm saying this because recently I had an engagement on a related issue, and someone was saying that wherever we are working, this is how it is. And
sorry, you're freezing the network. Well, it seems that she's well, she has network. Are you coming back?
can you hear me?
Yes, we can hear you. Go ahead.
Okay, all right. So I'm just saying that the person I was saying was around policy, extremely important, that policies have to be local and they have to take care of the local context of the issues on which policies are being written. And I was just giving an example that recently I had a related discussion and someone was saying that, wherever we are working in all countries in Africa, this is how it has to be done. And I was kind of arguing and saying no, but the contexts are quite different as far as that is concerned. Then, of course, there have been successes, and maybe what I would say here is how do we scale up, the successes for purposes of creating higher impact? Thank you.
Thank you so much, everyone, and for this session, for the contribution as well. But as we go home and as we disperse, we need to focus on these issues that I think they are very important in terms of enhancing the relevance of the financial services to have an impact, to ensure that we deliver the SDGs. And this will be the contribution of the financial sector towards realization of the Sustainable Development Goals, which everybody in this room signed to. So first is to make sure that everybody accesses relevant financial services. Secondly, even if the policy interventions to increase access and utilization, as well as the relevance of these financial services, that is the impact. We need to follow by monitoring and evaluating them to ensure that what the policy was designed to is achieved, and we correct the mistakes that are inherent in the policy design. Secondly, we need to ensure sustainability by enhancing financial literacy. It's important on both sides, but never to forget that fragility in the financial sector must be addressed so that we have both sustainable provision of financial services, and also on the side of the consumer, it has to be well informed. The issues of T and Cs that are printed in very small notes, and when the bill comes to pay, the fonts are too big. So we need to treat the consumers fairly. With the issues of market conduct, we have to address them. For the segments of the society that have saturated access to financial services, there is still room, especially in the East Africa, to make sure finance in general contributes to the realization of societal objectives. So, well, to this end, I thank everyone, our panelists. Please clap for them. And you, the audience, please clap for yourselves, because the questions that you have raised, the research issues, and the people in the academia, and also the policy researchers, we have to follow through. We have to make sure that the issues of financial inclusion are well prosecuted, not in the academia only. Don't do this research and leave it in the university to publish papers in the journal, but let them find a space on the decision-making table. engage policymakers. And nowadays, for those people who interact with policymakers like I and Komba, the threshold of making a policy decisions is far much higher given the capacity that policymakers. If you look at all this, there's no chief executive officers in the financial sector who is not a graduate, who is not a master's holder, who is not a PhD holder. These people need help to make meaningful decisions. So, and meaningful decisions that are impactful, are well grounded in science, are supported, and that science is driven by data and information. So thank you so much as you generate this knowledge and contribute to the issues of financial inclusion. So I welcome ARC to give us heads up according to the program. Right? Please.
Ladies and gentlemen, all in the ERC fraternity, and friends and the members of the network, mine is a simple duty. It is just to close this productive meeting today and to give a vote of thanks to all of you who did a lot of preparations, writing all the great papers we've listened to, prepared the summaries, shared indeed the fellowship of the excellent feedback. And as we are coming to the first conclusive stage of this research project, it's great that we could get feedback on the new evidence created, but also the ideas for uptake, potential uptake into policy and practice. Perhaps not simply by design, but as a way of concluding the first phase of this project. The project comes to an end with the end of October, so it has a couple of days to go. But that produces the birth of a new project that will be an extension of this work, and will start in January 2025 and run on for about 3 to 5 years to all extend this work in 2 areas that we have not so far covered. For example, much of the surveys here, the data you have seen, the data generation process includes looking at what the databases are producing, statistical bureaus within the East African area, some of the surveys being done. But there is great transformation going on in economic science, and especially in finance, whereby we are using methods that originally started actually from medicine and from sciences, called randomized controlled trials. This is where the surveys, you start with an initial survey that covers a number of, say, in the case of Kenya, it has 47 counties, so you cover all the 47 counties, trying to bring comparative data. Or in the case of East Africa, you cover all the 5 members of the East African community so far. And then after 1 year, you undertake a survey in which you do an intervention. Introduce, for example, a product that would be used for expediting or increasing the uptake of female participants in financial inclusion. Because the demand for inclusive finance is derived demand. That is, people going from PESA when financing to be able to meet their needs. So those activities which possibly there is gender sensitive, maybe you are buying food, maybe you are paying for the products that will be taken by your kids. So that means that there could be specialized apps, specialized technologies on your phone or elsewhere that could be used to expedite the uptake of gender. But also there is something that has been missing in this literature, and correct me if you think I've got it wrong. So I have not seen any financial inclusion study that is sensitive or recognize the role of languages and especially local dialects. So if you take a country like Kenya, or Uganda in the South African region, you find that the country has more than 50 language dialects. Okay. For example, I'm made to understand that in Western Kenya, a Maragori cannot hear what the other person is actually speaking. Within about the distance of about 5 miles. Okay. Now that communicates the fact that there is no common language. Okay. Apart from Swahili, which is a lingua franca national language, but maybe Tanzania has got it right. Every country can speak the language. But I still want to believe there are some simple changes in dialects which occur. Even in the industrial countries, when you look at the UK, the Welshman may speak, but the English will not speak anything out of what the Welshman is speaking. And so is the Scottish. So these local languages are so important for financial inclusion. Because if you produce M-Pesa and the language on the M-Pesa is English, that means you have to be you have to be able to read and write in English to be able to use the M-Pesa. If you made it in Kiswahili, that would increase the higher inclusion because the person reading it can possibly understand Kiswahili. But if you interpret the 47 languages, that would increase financial inclusion. So the question is language actually one of the missing gaps in the financial inclusion and the uptake of financial inclusion and the use of financial inclusion? This is easy to do scientifically because you run a randomized control trial in which you are controlling for language. Everything the same. Okay, you can see, you take people of the same height, same education, same ability, and the only difference you make is the creation of, say, languages or anything. And then you do a controlled experiment. From the experiment, you design an app, and we take the intellectual property, either you as a researcher or the ERC or even Zebro take the intellectual property for it. Okay. So I'm just exciting your idea, your minds now to see that although we have covered a lot of ground on financial inclusion, we're just starting to scratch the surface. There are many dimensions of financial inclusion, digital financial inclusion, that should be of interest. After all, we should be able to look at the economies, ourselves living in these economies, to understand what is really going on. At the ARC biennial on the 1st of December, which you will be all invited, I can say that the first provocative sentence I make in the concept note is that it's provocative, that arguably the simplest form of financial technology, M-Pesa, was invented in Africa, right in Kenya. And that contrary to the history of technologies, where technologies are actually discovered in the global north, and they descend down to the global south, like waterfalls. Now this is the reverse of the waterfalls, where basically M-Pesa, the financial technology, simplest form of financial technology, was discovered in Kenya and has percolated the rest of the world. That's the reverse of the waterfalls. So I'm saying all this to first thank you for the great contribution you've made to this work, and also to say we shall continue to look into the areas that we have so far not covered, and in the tradition of the ERC, we shall build partnerships with you. That's how ERC works. It's the partnership of people at universities, researchers from central banks, governments, and we included 2 elements which have been missing. That's the private sector, been missing in action, but also what has been missing in action is civil society, because we need to increase the uptake and the relevance of that research. So, in a while, let me thank you so much. At the ERC or Bill and Melinda Gates Foundation, which rolled out the money for this work, this will not happen without your involvement. Your involvement is so, so important. Your continued involvement, and this reminded me of Professor Moshi, who was saying, back into the fold. Yes, that's how it should be. The involvement is very critical. So thank you very much, those who have us here in the room. Thank you very much for those who have joined us online. At this juncture, I would like to just move a hand of applause to all of you. The speakers, the chairs, and all of you are now called upon Diana to say one or two things about what is next after here before we conclude going home. So Diana, you have the floor. Thank you very much. Thank you.
Thank you very much, Victor, and thank you everyone for holding up this moment. What is next? We are having a networking cocktail by the poolside. As from 5, please, we can meet there. And then those of us who have not seen Sheila, kindly see her. Sheila, please stand and say wave. Most people don't know you. She's a very quiet girl seated there. Please make sure you see her as you get out. Once again, thank you very much. And I wish us a pleasant evening and pleasant networking. Thank you.
Ulitoka kule kwa wanyama kwa they have cows with homes like this. So you look from Kampala, you can just cruise horizontally. Can you look through the other direction?
I was there for the wine and all the hand drinks.
When are you coming? Just send me a message.
That is our idea, is that we got the swimming pool, and those who get so excited, we shall see them in the pool, swimming, but nobody should leave that place walking upright. That's our idea.
Because of this good governance.